Capital, they're not going to use that money to invest, or do they just want to keep investors on board?
Yes, and we were talking about investments and appetite for investment earlier with our Julius Baer guest, weren't we? Talking about where that sits with political uncertainty, not a theme for him. So European equity markets then opening up this morning, opening up for this Tuesday morning, and giving us a little bit of a pop on the FTSE 100 straight out of the gates, up by 0.1%. We're expecting something a little more, though, if the futures picture is to be believed, because futures had certainly suggested we would go a little bit higher. But we're up by 0.4% then on those stocks. The IBEX in Spain up by 0.5%. So, yeah, setting a positive tone this morning. The London market perhaps getting a boost from the basic resource sector, which seems to be one of the stronger ones this morning. We're getting some movement higher in some of those mining companies. Travel and leisure also not doing too badly. But those are some of the early moves this morning as the CAC 40 opens up as well, up by around 0.6%.
Yeah. BP outperforming, is that what's giving London a lift this morning? I do wonder whether
Energy
that's the
now,
factor.
the top performing sector, yes, and BP is up by 4.6%, I see on my screen.
So the FTSE 100 now up by 0.8%. I'm just trying to see if I've got a read on what's happening with LVMH. Let's flick that to points. UBS, though, down by 1%. Let's call it circa 1%. Bayer, Critty was mentioning that, down by 1.5% as well. But UBS, I think a 1% move is well within the plus or minus in terms of what you would expect. I don't think there's anything kind of significant.
There's no like fundamental read through.
Yeah, I don't think there's anything significant that's deviated from where the market anticipated this business would be.
But it's still kind of curious because there are, and I did just use a very British term, by the way.
We're training you.
Congratulations.
Yes, it's my very first one. I'm very excited about it. But UBS, in the face of announcements of buybacks, to actually see the stock drop, I think is strange.
It's come up, so it had a big rally kind of back end of last year into December, and it's basically flatlined since then. The stock has basically just gone sideways. And today I don't think deviates significantly from that. So it's trading, what, 25.38. It's kind of been, I think it got north of 26.42, dipped a little bit since then. So, but again, it doesn't feel like today is a game changer in terms of the overall narrative.
Yeah, yes, indeed. On UBS, I mean, they're working very hard to try and convince everybody that they are making progress on the integration, that the cost cuts can take substantial costs out, restarting the buybacks then, as we've been saying. Let's listen in to another little bit of our conversation with Sergio Ermotti. He was speaking to Francine Lacroix a little bit earlier on, and let's get a sense of, because moving forward, this isn't going to just be about integration, it's going to be about what kind of growth that integration can drive. So let's listen into his thoughts on that.
One thing that we need to do is to be willing in the next couple of years to sacrifice a little bit of top-line growth in order to improve the returns on our financial resources, particularly on the balance sheet.
Let's get more now with Bloomberg anchor Francine Lacroix, who is, of course, in Zurich, and was speaking there to Sergio Ermotti. So UBS restarting the buybacks, increasing cost savings, a challenging 2024, perhaps a lot to handle. The stock a little sluggish this morning in a rising market, Francine. Perhaps not what they wanted, but not substantially lower, down by 1.7%.
Yeah, interesting, though, because when we saw the set of results and also, of course, their investor update, which lays out what they'll do in terms of growth for the next 3 years, I was wondering what the share price would do, and I think they probably did the same. If you look at the net loss, a little bit bigger than expected, so it just reminds everyone that there are integration costs in absorbing, of course, Credit Suisse. There's questions about litigation going forward, so it's not all plain sailing. But then on the positives, they actually said, you know, cost cuts will be $13 billion. We had previously thought it'd be around 10 billion. The chief executive was at pain and saying, look, 13, 10, it's not that different. So they're not upping what they're expecting in terms of cost cuts. But overall, there was a sense of a feeling that actually shareholders should be happy because there's more of a clear timeline. He did say that maybe they'll sacrifice some of the top line growth to make sure that it's solid growth and that they're on a stronger footing because of the balance sheets. But it's interesting that shareholders today maybe think that there are bigger questions coming. Again, the fact that they were resuming dividends and buybacks is a good thing. They had to pause that 5 billion last year when they bought Credit Suisse. Again, this was only in March last year, so they've made immense progress, especially on the timeline. But of course, questions remain.
Francine, in terms of those questions remaining, you've already seen as part of the integration, UBS cutting out big pieces of Credit Suisse. To me, the most notable one is their trading operations. Talk to us a little bit about what other hurdles, what other things could be on the chopping block.
Yeah, and I think, it's the right word. It's hurdles, Kriti, that we need to watch out for. So I did speak to the chief executive, Sergio Armati, also about the shareholder activist, that's CVN, who is behind the management for the moment, who says, look, the shares could double in the next 2 to 3 years. But again, the chief executive called this year pivotal because they have to go, all guns blazing in the first 6 months. Again, restructure, simplify the structure. They've said how they do it, but now they have to execute whilst at the same time growing. So you look at the litigation, you look at some of the investment bank. Again, we know that the investment bank of Credit Suisse is almost 2/3 there in terms of what they want to do. He was very, very cautious to talk to me about bonuses, saying, look, the people involved have been told. And then this, of course, is an environment where there's a lot of volatility because of an unknown on Fed monetary policy and, of course, geopolitics. So I don't think it's a hugely simple environment for them to deliver what they've promised. The share price kind of reflects that.
Fran, great interview. Thank you very much indeed for joining us. Greatly appreciate it. Francine Lacquart joining us out of Zurich, post speaking to Sergio Armati over at UBS. Busy morning on the single stock story. Demand is up. I think that's the hearing aid company out of Copenhagen. So certainly the market liking the narrative they're delivering. BP is the standout story, though, in terms of kind of the percentage upgrades we're seeing here this morning.
And taking with it Total, by the way, which is the second largest index contributor there. But it is an energy story, which I've got to say I wasn't expecting going into this morning. I thought it would be a bank story.
Yeah, energy, the best performing sector across Europe, up by 1.6% this morning. And, how much of this is the sector? How much of this is very specific to BP? You mentioned it is having some read across. Let's talk a little bit about this, perhaps, shall we? I think we've got some sound to play from one of the investors.
So here's the interesting thing about BP is that it trades on, and Kriti keeps going on about the fact that I'm obsessed with this, but I am. BP trades on a really low multiple.
It's okay, safe space.
Okay. Relative to the rest of the sector, like a really low multiple. And the sense is that they've moved too far in one direction under the previous management, Bernard Looney, in this energy transition story. And as a result of which, certainly versus US majors, their multiple has been crushed because investors have basically walked away.
Yeah.
Bluebell is one of those investors that's now calling for quite significant change. We spoke to them a few days ago. Francine spoke to them a few days ago. This is what they had to say. This is the view of Bluebell Capital.
Yeah, the position of BP in terms of, the long-term direction of this journey. But we think it's irrational and insane, to not to adjust and not to be flexible when the situation changes.
So not a huge amount of shares held, but a big portion of their portfolio held in BP, and they clearly want change. And there was a view that Looney was doing a bad job. Murray Auchincloss is the new CEO, so has taken over after being interim, has now taken over. Is the strategy going to change significantly? Well, what we've got this morning is a fairly good set of numbers and a big buyback, and the shares are reacting reasonably positively. James Heron joins us now to discuss this. James, you've been covering the stock. You're looking at kind of where this business is now. We've gone from the Looney era to the Auchincloss era. Has anything changed? The market seems reasonably pleased with the results this morning, but is the underlying strategy kind of doing anything here that investors are going to ultimately reward with a high multiple?
Yeah, I think the change that we're seeing this morning is a more forceful rebuttal to the kind of criticism you're seeing from Bluebell. BP is essentially saying, we're going to stick to our strategy. We can become a clean energy giant, but we can keep giving investors good returns, and into the long term, because it's not just the quarterly buyback they've announced for this quarter. They're saying we can keep up this pace until the end of next year. So it's very much a rebuttal to that criticism, I think.
It's interesting that they're saying that they can do both. They can keep transitioning and they can also return cash for shareholders, because quite often these conversations become quite polarised. What about the share buyback and the size of it? Bigger than had been expected? What messaging are we trying to get here?
Yeah, they're giving extra to shareholders. It was 1.5 billion the preceding 3 months. Now it's going up to 1.75. And as I said, they've made a longer-term commitment that they're going to try and maintain that. So yeah, but crucially, they're keeping a tight rein on spending to achieve that. So there will be questions about, yes, you're making this promise, but if oil prices fall or gas prices fall, is it affordable? Because obviously, like, even though BP is talking about the transition, the reason they can give these returns is because oil and gas prices are relatively high.
I mean, this falls into the global narrative that we had a couple of years ago about kind of capital discipline, to your point, where these energy companies it was kind of drill, baby, drill. And then they kind of had to turn that around to access some of the credit markets that were so closed off to them. Where does the new CEO fall in all of this in terms of the long-term planning?
Well, right now, they're kind of claiming they can do it all, really. They can run their existing oil and gas assets and get good returns from that. And they claim that they can get very good returns from trading power, trading renewables, stuff like that. They have a very big trading operation, and they've always said that's key to getting higher returns than these businesses typically generate. There's still investor skepticism, notwithstanding the share price reaction this morning, which obviously is very positive. So they've still got a case to make, for sure.
Leaning on that trading arm is something that I do wonder, and other people have flagged this as well, ultimately implies a lower multiple. James, thank you very much indeed. If you're an investment bank, you trade on a lower multiple if you have volatile trading.
Yeah.
They are leaning on their trade. James just said it. They lean on their trading business. But who knows what's going to happen quarter to quarter on that business? That's not a stable long-term strategy. It's a finger in the air. What are the markets going to be doing? Who knows?
Yeah, it's quite interesting. On a day, we've had both, isn't it? We've had numbers out from a bank and we've had numbers out, and there's a sort of trading element to both of them. But with both of them, there's a probably much more important long-term structural story about where the business heads.
UBS is interesting.
Is that what you buy it for?
But UBS is interesting in as much as it actively, after the GFC, moved away from that trading side of the business. It went into asset management in order to generate that stability that investors reward it with a higher multiple.
Yeah, but I still think, I'm going to bring it back to the buyback story here. Our producer, Dan Curtis, was kind enough to pull up some of these numbers. But if you look at issuance here, I'm going to connect the dots. I know we're talking about the equity story, but issuance has jumped as well. A couple years ago, every time issuance jumped, it was because companies were issuing debt to have more cash to support the stock. And that's kind of the trade that it seems like is coming back into these markets. I can't 100% say that's what BP is thinking, but you are seeing this trend where both the debt markets and the equity markets are being accessed here at the same time.
Because, and in some ways this comes back to the much bigger picture, which is that debt is treated so differently to equity that it's cheaper basically to fund equity through debt. You buy back that debt because just in the way that debt is treated. And whether or not we need to review that is a much longer term question. We don't want to go down that rabbit hole just now. Let's talk about some of the other individual movers. It's a busy morning. Joe Easton has got all the details.
So here's your earnings movers on the board here. We got BP up 5.7%. It's the biggest gain since April last year. A lot of that driven by the buyback story that you've been discussing there. And we've also got Demont Hearing Aids, as you mentioned earlier. Now, the company actually reporting weakness in their main hearing aid division, but announcing that they will potentially sell their communications division, which is personal audio equipment, a smaller part of the business, but investors liking that news there. Then a couple of mid-cap banks to bring you. Unicaja Banco out of Spain, up 5%. Dividends and buybacks, once again, around 100 million euros worth of buybacks for that company. And Virgin Money here in the UK, job cuts once again at that company. Some better than expected profit for the moment, but that stock down sharply recently, coming back up today. All those earnings stocks are positive. In terms of the chip stocks we had in stocks to watch, we'll bring up Infineon at the top here, down 1.3%, much worse than expected, a downgrade to guidance. And I've just been told that Nordic Semi is halted, so we're waiting on a price on that one, much weaker than expected as well, down 40% in terms of their profit. So that one potentially going to drop at the moment. Not seeing too much of a read across in the peers in Europe, ST Micro and ASML, the chip machinery firm, both positive. We did get that report from NXP Semi giving a bit of positive in the US last night. In terms of another big mover we've got here, it's Morphosis. We had it in stocks to watch. They are being taken over by Novartis. A 36% jump for that stock yesterday, and it's continuing to go higher because the price has been revealed at 68 euros a share. It is a big premium, even where it closed yesterday. So we're seeing it coming up another 15%, but Citi downgrading that stock today to hold, saying they think that deal will be approved, so not too much upside once it gets to 68. Then staying in Germany, we're going to look at Bayer. You mentioned earlier as well, Bayer getting another negative court decision on the Monsanto weed killer case, potentially paving the way for billions of dollars more claims for that company. This issue just won't go away for the German conglomerate, so that one is falling once again on the DAX index, one of the worst performers we've got today. Then in terms of your morning calls, the big call of the day, LVMH, cut to hold at HSBC. Curb Your Enthusiasm is the title of the note. They say that after the 13% rally last week or around 2 weeks ago, that stock is very richly valued and they don't see much value. They actually apologised to investors in the note for not having better ideas of where to put your money. They say it's a proper hold recommendation. Keep hold of HSBC, but it is rich at the moment. Finally, BE Semi. We've had the negative news out of the semiconductor space. We got some positivity. This one, BE Semi, upgraded at Exane. They make packaging for the AI chip space, and they say that is a boom area, one area that is underappreciated. So that one goes higher, around 2.4% over in Amsterdam.
Joe, thanks very much. Joe Easton from our equities team. Coming up on the programme, we'll discuss the Fed. We'll get into expectations for the year ahead. Fabiana Fedeli joins us, M&G Investments next. This is Bloomberg.
Was around so many powerful people in my entire life. From the time I got married to Robert Kardashian and had a whole ecosystem of businessmen and entrepreneurs and people running studios. And, you know, any given day it would be the head of a studio and, you know, just often paid attention without really realizing I was paying attention. And I had a very amazing education. I was a housewife. I was raising 4 kids at home. I had the most blessed situation, but at the same time surrounded by these business situations that I didn't even realize were happening right in front of me, but I must have been absorbing it because there's so many times I've like brought up in my mind one of those conversations that I had learned from. And so I think I had a very lucky and blessed existence that way.
What happened was you were offered a money-losing women's basketball team, and you said, I want to be in the other sports as well. Is that right?
Well, yeah, you know, you got to be smart about this.
Nobody brings you top names like Bloomberg.
The point is that the economy is doing very well in the Netherlands, but the election was very much focusing on migration.
They had made 26 attacks. We'd given warning after warning, but we hadn't taken action.
Parliament has to stick to this. It has to comply with the debt brake. The debt brake is really a good ally.
I think we have made addressing inequality a key sort of driver of our policies.
Bloomberg. Context changes everything. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg. Context changes everything.
feels like the economy's been quite strong on the growth front. You got big jobs numbers, you got big GDP numbers, better than expected. But at the same time, we've had inflation better than expected, too. If we just keep getting more data like what we have gotten, we're well on the, I believe that we should well be on the path to normalization.
Federal Reserve Bank of Chicago President Austin Goolsbee speaking exclusively to Bloomberg Television. It seems to be a continued theme here about this kind of divergence you're seeing between the Federal Reserve and some of the other kind of members of, I want to say, the Biden administration. This idea that you're talking about, do we need to be more hawkish? Do we need to be more dovish? They're kind of laying the groundwork for it, but they're still saying we need a little bit of time.
The path to normalization, a theme that you brought us this morning, Chrissy, and I think maybe we stick with that. Let's talk to Fabiana Fedeli, CIO for Equities, Multi-Asset and Sustainability at M&G Investments, with us on set this morning. Fabiana, we heard there Austin Goolsbee talking about the path to normalization. What do you take away from that? Because we had a really interesting conversation earlier on about what does normalization mean for rates. You know, maybe that's what he's addressing, but also maybe inflation. How do you see, what does normalization from here look like to you?
Good morning, Anna. Well, the one variable that the Fed is looking at is core CPI. And what we've seen over the last few months has been core CPI coming down, being closer to the target that the Fed has and also to other central banks' targets. However, you still see potential inflationary upward pressure coming from yesterday, ISM services numbers, or last week, the payroll number, the average hourly wage increases. So the Fed is on a wait-and-see approach. They know that they will have to cut eventually, but not as soon as the market expects.
Yeah, I mean, does that look too normal? That economic picture that from the jobs to the services ISM looks too normal and not slowing enough to satisfy the market's demands for rate cuts? How do you tie the two together?
At the moment, yes. You know, you need these two variables. The Fed is going to cut either if CPI comes down to the target levels or if the economy decelerates to a point where they need to cut. Right now, neither of those variables is actually appearing obvious, and therefore we're still waiting. But the direction of travel is fairly clear, right? If CPI continues to come down and the economy stays fairly stable, that's actually not a bad place to be for risk assets.
Fabiana, is the market in charge of the economy right now? $6 trillion worth of money positioned on the front end of the curve. Are they driving?
I'm not really sure the market ever drives, and I'm not really sure the economy ever drives. There is a little bit of a pas de deux, is a dance, right? And right now what is happening, there is a lot of money on the sidelines, a lot of money in money markets, and investors need to figure out where to put that money. So on the one hand, you have fixed income markets. If numbers, as we expect, on yields are coming down, you could have like high single-digit returns this year on fairly risk-free assets, although you could decide if that's risk-free or not. And at the same time, you have an equity market that can give you a lot more potential returns.
But if you're then talking about a market that is pricing in, I think, 5 or 6 rate cuts this year at this point, yes, it's come back from the 7 it was originally pricing. But if the market is pushing that forward, and there is a 12 to 18-month lag potentially from the Federal Reserve, is the market then, is the real effect in terms of the economy showing up from the interest rates that, again, the markets are driving?
Probably you don't need to see that real effect. The market anticipates. So in this way, it will go a little bit sooner than the impact on the markets will be, as long as they see the Fed actually on a cutting path.
So we then don't have to worry about some sort of reverse repeat of what we saw in the fall, where that kind of volatility in the long end of the curve, the 30-year, for example, was something that central bankers around the world had talked about. But that was in the opposite direction. To see kind of a bullish move on bonds, that's not something to worry about.
Unless data proves that there is uncertainty out there. So it's literally about data and what the market anticipates on the longer term travel.
I'm in cash. I want to know what I'm going to do with my money. Are there better entry points coming? Am I buying a US 10-year at 4.5? Is there another opportunity maybe to coming through there? Do you think stocks look a little toppy right now and are going to get more choppy? What do you, if you had cash on the sidelines right now, if you're a portfolio manager, you're waiting to kind of see what you want to do, is now the time to get in? Or are there better opportunities further down the road?
Well, if you believe the yields are coming down, then you want to put that money to work.
Yeah.
Now, timing is very difficult to figure out. So I can tell you what we are doing. We're keeping fairly balanced between fixed income and equity markets in our multi-asset portfolios. And we're really trying to play that idiosyncratic risk in both areas. Anna this morning was talking about stocks, was talking, is this about sector or idiosyncratic? A lot of it is idiosyncratic. That's a great place to be.
And you can outperform the index that way? You think you can generate alpha that way?
I do believe you can.
How hard is it in reality to do that right now? Because the market's being whipped around all over the place. Indexes are kind of going sideways, but single stocks are definitely, and sectors are definitely moving around a lot at the moment. But you are right for a while and then you're wrong very quickly. And that's the problem at the moment.
That's a $60,000 question. It is not easy to outperform, but it is possible. If you look at some of the earnings results that we got over the last few days, you can see that some stocks actually are doing incredibly well, very differently from the rest of the stocks in the sector. So stock pickers who are able to pick the right stocks can do very well in this market. And at the same time, you can still keep a broader exposure to fixed income markets for that kind of like risk-adjusted performance.
And Fabiana, we've been throwing around another theme this morning, which is capital markets activity around IPOs and M&A, and we've seen a bit of M&A this morning. It just creeps back onto the radar, and anecdotally we talk to people who say things in investment banking, things are a little better in the first quarter. I think we heard something similar from UBS. Are you looking at 2024 as delivering more on those fronts?
You know, cash is still expensive. So companies that have plenty of it, that have strong balance sheets, will definitely be able to take their picks. Now, this doesn't mean that everyone will be able to go out there and buy. It's not the same indiscriminate market that we had when cash yields were so incredibly low. But companies that have strong balance sheets, they have a great market right now to pick their own companies.
All right, Fabiana Fedeli, CIO for Equities, Multi-Asset and Sustainability over at M&G Investments. We thank you so much for your perspective on all of the markets. Look, she said it there, that you got to be careful, you got to be an active picker, you got to kind of pick both the good trades and your poison, I suppose. What was your takeaway from that, Anna?
Well, I'm focused very much on whether this is going to be a better year for M&A, I suppose. Yeah. That's one of the things.
But volatility is going to be, it looks like it's going to be a key theme. It already has been. In some ways, that's great for trading if you're a short-term trader. Investing, I think, is a much more difficult narrative to get into because, and you look at how much cash there is on the sidelines at the moment, clearly a lot of people agree with this. But you're just getting whipped around. This is the problem. We all thought the yields were going lower. They're going higher again now. The consensus trade was clearly wrong there. You're going to be right for a while, then you're going to be wrong, then you're going to be right. It's a question of kind of how much constitutional strength you really have in terms of what this market is going to look like throughout the year.
But I'm glad you said the volatility helps the traders because in theory it does. But then when you looked at the BNP numbers last week, you didn't see that.
No, you got to be on the right side of the trade.
Side of the volatility. You got to execute that right. Regardless, we're going from the banks and a little bit of everything to a big mover this morning. Infineon cutting its revenue guidance for the year. The chip maker seeing a pretty big slump in demand. We're going to dive into the details next. Stick with us. This is Bloomberg.
Formed a partnership with Penny Pritzker at some point to do parking, is that right?
Yeah, so when I was working at JLL, that we went through this real estate recession in the early 90s, and the senior people at the firm said, let's do a retrospective on all these different asset classes to see what happened, how we overpaid, why we ran into so much trouble, what really happened in the marketplace. And when I did that, I recognized, wow, there were a lot of reasons why I liked the parking assets better than I did office and retail and industrial. And so I started really noodling on the differences between those asset classes and came up with a rationale to start a business in the parking space. But I crossed paths with Penny Pritzker, who later became our Secretary of Commerce. And she liked the idea, and she and I went off on this adventure together and built a real estate operating company in the parking space.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Always on the heartbeat of the tech
spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
This is Markets Today. We're about 30 minutes into the European trading day. We talked plenty about the macro. We'll still talk a little bit about the micro because it is a sum of all parts trade. You've got plenty of companies coming out with some interesting numbers, some interesting developments. The three that are catching our eye this morning, UBS, BP, and Infineon. UBS, BP coming out with some strong numbers. UBS under some pressure this morning. BP driving the market higher. Infineon, again, pulling the market lower. There's a lot going on here. I don't even know where to start. Talk to us about what stands out as sensational to you guys.
BP up more than 6%. I think that's sensational.
BP certainly, they're getting the reaction, and certainly with the new CEO in place, you are going to want that reaction on the first time you've delivered an earnings call. So that's going to be good news. They'll be feeling better about that. Still come back to the multiple. UBS, I think, is neither here nor there. I think they continue to deliver. The share price had a very good run at the back end of last year. It's basically going sideways at the moment. Yeah. I think it's looking for another catalyst. So I think today was not that day.
Yeah.
Infineon basically just fits into the pack, though, doesn't it? I'm surprised you're getting as big a reaction in Infineon in some ways. I know they've missed. But the mood music coming into it, off STM, off Samsung, off everything else has been, there's caution in this space.
And this is a sector with exposure to the auto space.
Yeah.
Sorry, a company with exposure to the auto
Infineon,
space.
definitely.
So you would have thought that was sort of in the mix and in the thinking ahead of these numbers, but it is that top line maybe.
What I struggle to kind of square in my head, as admittedly someone who's new to Europe, is how you see the kind of German economic data that we got today. But then you look at some of the German corporates, and it's two completely different stories.
I think David told us the 2-month average was the thing to look at on the data.
Yeah, to your point, it's very lumpy.
Yeah.
And these are big ticket items. It's going to be very, very choppy as a result of that. But I think German industry is having to deal with a number of challenges, one of which is wages, which I think is certainly kind of represented across the industrial sector at the moment. You look at Boeing. I think the machinists at Boeing are looking for a 40% pay rise. That's what Boeing needs right now. That's what Dave Calhoun needs right now. But Europe is also still dealing with the energy challenge. These industrial companies are still dealing with the energy challenge. It was interesting yesterday, the UK, the data there suggesting that UK industrial companies have yet to fully pass on that price rise to consumers, to their end users. So there's still some inflation pressure coming through there. So I think you're going to see a lot of choppiness as we go through this adjustment on the energy front.
Yeah, and then inflation, and then the labour market in the UK as well, tighter than had previously been expected.
Exactly. Yep.
I mean, these don't feel like the precursors to widespread rate cuts, do they? And yet that is where the market still is globally. I'm talking very generically globally. We're still thinking about large-scale rate cuts coming this year. And I know there's always there is a disconnect between what the central banks are telling us they'll do and what the market is expecting.
Yeah.
But, what breaks there? And
then the other piece you have to factor in, which to your point about the wages, we've been seeing protests across Germany, across France, even in Brussels as well. And a story that we haven't hit this morning is simply the EU is pulling back from their emissions kind of requirements to address some of those protests and address some of the cost pressures that were on there. We should probably go to our go-to protest correspondent who's assigned to a different story this morning. Oliver Crook joins us on that Infineon story. We're talking about Germany, Ollie. We're talking about Infineon reporting that lower than expected revenue. You, of course, have covered the protest stuff as well. We may or may not come back to that. Square all of this for us. What stood out to you from the Infineon story?
Well, what's really interesting, Kriti, is that actually at the heart of the semiconductor story and the chip story is actually the industrial story, and that we have seen played out across STMicro, Texas Instruments, and today in Infineon. So basically, it was a disappointment in terms of the revenue that came for the quarter, a disappointment in terms of the guidance. We should also say that this is the first quarter of revenue decline since the pandemic for Infineon. I think the main line that analysts were focused on is that margin miss for the expectation in the next quarter, coming in at 18% versus 23.1%. That's all very material. But again, back to the chip story, what we're seeing is a slowdown, not in AI chips, not in the super sophisticated high demand stuff, but for industrial applications. And that is a slowdown we've seen across the industry. We see the same thing in Infineon. However, the part of that is supposed to offset that for Infineon is the automotive sector, where actually they see that demand is still staying resilient. Does that stay, though, is the big question.
This is a really cyclical sector, Ollie. Always has been, probably always will be. So where are we in the cycle? Is this the bottom? Because you want to buy, in some ways, if you want to buy these stocks, you want to buy them at the bottom before the cycles turns. So when does that pickup come?
Yeah, that's an interesting question, Guy. Unfortunately, if you want to buy the bottom, you probably have missed it, because I was looking at the Philadelphia Semiconductor Index, and despite the fact that we've seen, kind of a bottom for the chips, it's close to its all-time high, right? So what we got last night was actually the sort of the Industry Association for Semiconductors putting out their outlook for this year. First of all, we should say that last year, semiconductor sales fell 8.2%, but they do expect a bounce back this year of up 13% to a record year for semiconductors. But they keep saying, Guy, in the back half. And when I hear in the back half, I've been waiting for a recovery in China in the back half for 2 years now. Germany, the economy is supposed to recover in the back half of the year. I think it's a bit of a euphemism for we're not too sure what the outlook looks like. And I also think that for Infineon specifically, have we begun to really price in the question about this slowdown in EV sales? Remember, there are many, many, many more chips in EVs than there are in ICEs. With that transition going maybe a little bit more slowly, a little less voluminously, could we see that in the bottom line for Infineon longer term?
Thanks very much, Ollie. Good to get your thoughts on that particular story. Yeah, Infineon, one of the big moves that we've been talking about this morning, so thank you for that. Oliver Crook joining us there from Berlin. Now, Bayer has suffered a blow to its efforts to finally put a lid on expensive litigation around the weed killer Roundup, the German company losing one of its 2 actions before a US federal appeals court. Let's get more on this story. Bloomberg's Tim Lowe joins us with this and other news from the chemicals and the pharma space. Tim, good morning. So where does this leave Bayer's huge Roundup litigation situation? This is a story that has run on and on and on.
Yeah, it sure has. And it inherited it with its Monsanto transaction back in 2018, as you probably recall. And the litigation has dogged it from day one, basically. And that's just crushed the Bayer's market cap and complicated its efforts to right its ship. It still has about 40,000 pending suits in the U.S. of plaintiffs claiming that Roundup causes cancer. This blow yesterday in the appeals court, that was one effort that Bayer had to try to kind of swiftly do away with tens of thousands of these claims. Its argument failed to persuade a federal judge. The company still has one more of these appeals pending before a different U.S. Circuit Court. It's also claiming that it's trying to go all the way to the Supreme Court, but analysts and investors are looking at that. It was kind of low odds to begin with. One blow's happened, so it's not looking great.
Tim, how do you turn a business around with this hanging over your head?
That's the trillion-dollar question, perhaps. New CEO Bill Anderson needs to solve this. This is probably priority 1 in order to solve a whole host of crises facing the company. Its pharmaceuticals division needs new drugs in its pipeline. Its consumer health division is kind of helping the company, but it's not really fitting in with the other 2 businesses, perhaps. Strategically, a lot of investors think. But Anderson, the new CEO, it's difficult for him to try to either separate crop science from pharma and consumer health with this massive uncertainty hanging over the company. No one would want to buy, if I were to split off the crops division, who would want to invest it right now when the company has already claimed it might have to spend $16 billion to solve their Roundup litigation? Wow. And now, for the first time, investors are wondering, is $16 billion even going to be enough? Because when you lose a situation like this, it's only incentivizing more plaintiff attorneys in the U.S. to file more suits.
Yeah.
So it's a real enigma that the company has struggled to resolve, and it just keeps going.
Don't you just love the American legal system? Let's talk about the American deal space as well. Novartis in particular, it's not the American deal space, just the deal space in regular. 2.7 billion euro deal between Novartis and MorphoSys as well. MorphoSys shares trading about higher by 15%. Novartis starting to turn into the red, although did actually come out the open in the green. Tim, talk to us about what this deal is about.
Yeah, so Novartis is, this just completed sort of a transformation. It's really focusing on, biopharma, future medicines. And just last week, they did their earnings, and the CEO was saying that they're looking for more and more of these bolt-on deals, $5 billion or less. And this fits that bill. Now, MorphoSys has only one product that's approved right now. It's a cancer drug. It has a second one that's probably coming online maybe in 2025. Had pretty good phase 3 trial results in late last year, although it wasn't really convincing for a lot of investors. So there's been a lot of uncertainty around MorphoSys. MorphoSys, from its perspective, it needed to bring in some cash because it wants to launch this second medicine. It has some debt payments to make. So there's been some speculation about whether it's a takeover target in recent weeks, and this came on pretty fast.
Here's my question. You talk about the scale of the deal not being that big. Is Novartis going to do a big transformational deal? This kind of is a continuation of a theme. Does that change? Are there big enough deals out there in this space that Novartis could do?
Yeah, I think there is. Novartis has a lot of resources, but I think like a lot of the big pharma players, the company is a little reluctant to pull the trigger on something really big. The track record, all the CEOs keep saying the same thing. The track record in recent years of big transformative M&A in this space is checkered at best. They all seem to love this sort of $5 billion and below bolt-on story. So you see a lot of this over and over. They think there's more value in investing in earlier stage pipeline assets. What's interesting in this case is that MorphoSys, as I said, has one product already approved, and the other one that everyone's really focusing on, it's already finished phase 3 trials. So it's not that early stage. So I think that's raised some of the questions about whether Novartis is overpaying for this product. I've seen some analyst notes this morning suggesting that. So, now Vaz, the CEO of Novartis, he did say last week that they're not ruling out big M&A, but they're hewing to their strategy that they've had until now of $5 billion and less, as much as possible.
Yeah, I guess, as you say, it kind of reduces the risk, kind of career risk of doing a deal that is wrong. You kind of compare and contrast the Bayer story, that Monsanto deal, absolutely disastrous, career-ending for so many, and then you think about the risks maybe of doing a big M&A deal in the pharma space. Maybe it's just simply not worth the risk. Tim, nice. Thank you very much indeed. Always appreciate you joining us. Tim Lowe joining us on some of the deals. That's the risk, isn't it? And it's going to be interesting to see whether deal flow does pick up this year.
Yeah.
The bankers certainly are pointing to it. I just wonder whether or not that is based on the rates environment coming down and a bit more stability there. And if that doesn't materialize, does that deal flow come through?
In Tim's sector, it is really interesting to ask in the same conversation, will there be bigger deals here? In the same time, he's talking about such a disastrous deal that went so badly and just really underlining the risks there. But also interesting, MorphoSys is not actually trading at the offer price. It's at 66. Now, that's normal, obviously, with some execution risk in there, perhaps. But that's, a couple of euros off what Novartis is offering to pay.
Yeah, but this speaks to something that you're seeing in the technology space. But I'm going to kind of push this over into the biotech space as well, which is that a lot of these companies in the S&P 500 and the Stock 600 are sitting on record piles of cash. And the problem is that they haven't been able to deploy it. And you are now suddenly seeing them actually put it to work. But the problem is how many of these deals are able to pass the regulatory scrutiny, which has also been amplified.
So which is your better choice as a CEO? Do you do buybacks? You say, you know what, I think actually that's the best use of my cash at the moment. I don't have an investment opportunity. I don't have an M&A deal. I get rewarded by shareholders for doing the buyback. The execution risk around doing an M&A deal is enormous at the moment.
Yeah.
Why should I take that risk? So I think it's interesting that we've said a lot of buybacks this morning.
Yeah.
And a few deals. Be interesting to see whether the balance shifts.
I found one of the interesting themes that we were picking up on in CEO interviews from this sector was around AI. And I know a lot of our focus on spending on AI has been around companies that do AI and provide AI, but around businesses that could really benefit. You know, there's something there, isn't there, around pharma
but
and
around
a
long way away. They're all saying it's not. It's a long way down the road.
From Morgan Stanley recently, they were saying even for some of the big tech names, it's 2025, and then for these businesses, it's much further ahead.
And I think Novartis said it was like 2030 and beyond. And a similar story for some of the other pharma names we were talking about. But to your point, Anna, about or to your point, Guy, I should say, about which one you would do as a CEO. Aren't most CEO pay packages tied to stock performance? So
exactly.
This feels like a pretty easy choice.
But if Sergio Motti, let's come back to that. If you can execute a big that deal is going to be transformative. It's going to catapult UBS into the Morgan Stanley kind of arena. And it came with relatively low risk. They were almost forced to. It was almost forced to the deal done, and the risk around it was relatively low. They've got to execute on it, but some deals make sense, some deals don't. But CEOs are not rewarded.
Yeah, the bankers want to see more of them.
They certainly do.
They make some money out of
the pictures are there.
Let's tell you what's coming up on the programme. UK retail sales slowed at the start of the year as consumers tightened their purse strings. We will discuss that next. This is Bloomberg.
MasterCard introduced PayPass, its first contactless payment system, in 2002, but the technology took some time to gain traction.
I would say we first invested in this many years ago. The adoption rate on this in the early part, even in markets like the UK, Canada, Australia, was fairly slow in the early part. The inflection point of when it really started to hit its stride was when it was used in the transit vertical. So what we figured is, let's get all the transit systems around the globe enabled for contactless technology. That will create muscle memory for the consumer who will like the experience in transit and will use it elsewhere.
How do you judge the revenue proposition for MasterCard with an innovation like that and the adoption and the pace of it?
Look, I mean, for us, we're agnostic as to whether somebody's using the chip technology or the contactless technology or, using the mag stripe, which was the old way of doing business. We earn revenues which are quite similar across both of those. The revenue potential and upside for us comes from the fact that now more spend is being done on card-based forms of payment than was being done in the past. So we're converting that cash over to electronic forms of payment, which is where the incremental revenue comes from.
If contactless payments is the current revolution sweeping the payments industry, what's the next one?
I think pay with your smile. So, biometrics.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern every weekday morning at 6 a.m. Eastern, only on Bloomberg.
We always thought that rate cuts will be necessary in the U.S. because you went too far in the monetary tightening. So to relax that a bit, I think this is still on the agenda. And of course, the stronger the economy is, the less needed is this to do. We still think there will be rate cuts. We think 75 basis points. That's much less than expected, and in particular after December, than priced in by markets. With 5.5%, we are far too restrictive, and there's no need. When inflation is coming down to 2%, you don't need to be restrictive.
That was David Cole, Chief Economist at Julius Baer. He spoke to us earlier this morning. Interesting to get his thoughts on where the Fed goes from here. Let's have a quick rundown of what is in store for us today. At noon London time, we get the Bank of England quarterly report on the Bank of England's asset purchase facility. Then before US markets open, we'll get earnings from Eli Lilly. Its Zepbound weight loss drug will be in focus, of course. We then turn our attention to the music streamer Spotify with a close eye on subscriber numbers. After markets close, we'll get numbers from Ford, from Snap, from Chipotle. And later in the day, we'll be looking out for comments from the Fed, from several Fed presidents, in fact, including Cleveland's Loretta Mester, Minneapolis' Neil Kashkari, and Boston's Susan Collins. So plenty of Fed speakers, actually, to listen to. But, I mean, the trend of late has just been the Fed pushing back against market expectations and the market's not listening. So whether we get anything different, I don't know.
The market is now starting to listen to the data.
Yes.
So it's when you maybe have the combination of both of those two factors.
Maybe the market does listen a bit more.
Yeah. Maybe there's a reason to listen.
I didn't realize that Chipotle was reporting today. And the reason I put an extra emphasis is, one, because I'm craving Mexican food at the moment. And two, the people used to look at Chipotle prices and say that this is like the perfect example of price hikes and passing costs on to the consumer. Yeah. And simply because, again, this is kind of a hilarious thing to talk about, because Chipotle has so many different ingredients and it's sourced from, you know, all the parts of the world, it is the perfect gauge for it. And they had actually hiked prices of their burrito bowls way before anyone else did. I know way too much about this company.
This is a new index.
But there's a macro take to it. There's a Chipotle story. And I think Carol Massar once had an interview about it where they were saying that avocado prices was actually one of the biggest weights on the company. But I think it speaks to the supply chain story, the consumption story.
Move over Big Mac Index.
Big Mac or the Pret Index, I think.
Yeah.
But I noticed Chipotle is a thing here as well.
But it speaks to the labor story. It speaks to, as you say, the input cost story. I think is fascinating, and just a kind of good read on what's happening with the consumer. How much price tolerance, how much ability to pass on prices is there still in this market?
And it is still a thing we're talking about with CEOs, isn't it? Their ability to pass on. And I can't remember which company it was yesterday, but there's certainly, in some sectors, there is still that urge to continue to pass on those prices. Ford will be interesting as well. EVs, we've talked a lot about EVs and where the demand story around that goes. And we've already heard some negatives from Ford on that front.
Yeah, they're pulling back. So the F-150 Lightning has not done as well as anticipated. Americans do seem to have an issue with buying EVs. I wonder how that strategy changes.
Americans love coupons, and there's no coupons that go with Ford trucks.
No, but there's usually quite big discounts, and you're paying a lot of money for the upper end F-150 when you can buy the gas version, which is significantly cheaper. And you know it's going to get you there.
And not to mention you can't drive any of those on a European road.
I can't even get started about that point. But let's talk about as well the labor story. Don't forget the Detroit strikes that have weighed so much on these companies' ability to kind of capitalize on that run.
Yeah, labor's taken a big chunk of the profitability. And that's a theme that continues to run. Boeing, 40%. They want a 40% pay rise.
Where's our 40% pay rise?
That's a good point.
Let's go to another corporate story this morning that very much in focus for us here in Europe and certainly in London, because this stock is really flying up by nearly 6% on BP. Sam Onstead joins us from the Markets Today blog, and they, of course, covering markets today, as the name suggests, on the tin. Thank you, Sam. But with a particular leaning towards London, and BP, of course, well held by London investors. So what are the things that have been standing out to you about the BP numbers this morning?
Well, I think the buyback is obviously very important. I think the fact that it was higher than expected. For BP in particular, buybacks are very big for all oil companies, but for BP in particular, that is a really core part of their story. But actually, I think one of the really interesting things today, they've got a new CEO in place. They've come out today and they are really backing their strategy, which is to continue that shift over towards renewables. Other, Exxon, Chevron have never done that at all, and their valuations are much, much higher. This has been an argument that an activist investor came after BP for, but they're very much backing up that they're going to continue with their
he's just a continuation, isn't he? He's just like Looney 2.0.
Yeah, pretty much, and I think, so I don't think it's hugely unexpected, but it is interesting that they have stuck to it so firmly.
Because they trade on such a low multiple relative to the rest of the sector. Pretty's laughing at me. It's my bugbear with BP.
It's like
that
the
it only,
seventh time he said it.
I know, but it's the story. How do you? If you're a CEO, isn't your job to raise that multiple? Isn't it your job to raise that multiple to the rest of the sector? That's the problem here, and that's why you basically got Looney 2.0. The strategy is not going to change.
Yeah, and actually the CEO today saying we obviously don't agree with the activists, but we don't agree with what they're saying. We think our strategy is the right one. We'll focus on becoming a simpler, higher value company.
There you go.
Yeah.
Yes, and you know that may well prove to be true. But certainly, if you look over the last year, but over the last 5 years, the share price performance of Chevron, Exxon, way beyond BP and Shell. You know, Shell last year did pivot to what the investors wanted, going back to more sort of fossil fuel, oil and gas business, and
the multiple's gone up.
Yes, exactly. Yeah,
we get it.
I know.
Let's talk about that though. To what extent does that then spread to the rest of the energy space at a time when you're looking at oil prices coming down? Actually, nobody wants exposure to the actual commodity itself. So when you look at the investment around some of these stocks, is this a way of getting that oil exposure without actually taking on the volatility of the actual commodity?
Yes, I think to an extent. I think you know, for the question for BP, and as we're kind of talking about with the valuation multiple. Sorry to go back to that again, but it is, you know, very much the case that the valuation is
okay. You're fine. Don't worry.
It's very different.
Okay,
the rage is only directed in one direction.
This is a safe space, according to Critty. We're allowed to discuss this.
I think what we see this morning, I think the buyback is very important with this as well. So yes, they are sticking to this strategy.
Yeah.
That strategy is unlikely, certainly in the next year or so, to do anything to the multiple, but the buyback kind of helps with that. So I think if anything, they're buying themselves a little bit of time.
And where are we on the UK macro story, Sam? Help me out. UK retailers struggling in January, but I mean, it's a bit gloomy.
Yeah, and actually January retail data is often very hard to read anyway, because a lot of it gets compared to December. So, and one of the most interesting parts of the report, we had not only the BRC today, but Barclays as well, is that spending on food did continue. It actually went up.
Yep.
There was a higher spending on food in January than there was in December. Now, a lot of that is because of the discounting being done by supermarkets. And actually, you were just mentioning a little while ago about pricing and volumes, you know, over the course of the next year. That has come out over the course of January. Those discounts have gone down, so their spending looks a little bit higher. But it's hard to read too much into it because January is such a big distortion against the previous month.
Just full disclosure, I bought a pair of shoes the other day, something that doesn't happen very often.
This is noteworthy.
Me entering a shop and buying something,
Guy
maybe.
in retail outlet shopper.
Yeah, precisely.
Alex Steele would be so proud.
I know she would. Honestly, I almost messaged her the other day and said, I bought a new pair of shoes. She's waiting for me to go jeans shopping. The thing about all of this, though, Sam, is the retail story. Yes, there's some bleakness there, but if you take a step back, actually, I'd have thought this data would be much worse.
Yeah, I totally agree. I think the whole story really of 2023 in particular was this resilient consumer. And actually, when you look through the data, it's still pretty resilient. They're just spending in different places. So, you know, there has been a bit of a decline in restaurant spending, people staying in more, but they're actually still spending pretty much the same amount just by staying in. So it's kind of a false economy for most households. Whether this changes over the course of the year, you know, still got a lot of monetary policy to transmit to the economy.
Yep.
That could be the case. But I think right now, the resilience does seem to be holding up pretty well.
All right. Sam Unstead from our Markets Today blog, we thank you so much for joining us this morning. Get more from the team on the front page of the Bloomberg UK website or simply by typing in TLIV Go on the Bloomberg terminal. I think that does it for Markets Today here. Guy's thrown in his specialty words. We've got volatility, we've got sensational, we got multiple.
Multiple is the word of the day.
All of that. Anna's talked about the data. Anna's talked about the M&A stuff. I think we've got all of our little obsessions on the show. Plenty more to obsess about in the next hour or so. The Pulse is up next. This is Bloomberg.
This will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears. Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some points that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in? I'm in.
I'm in.
We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 11 a.m. on the East Coast, 8 a.m. in the West. Only on Bloomberg Television. Context changes everything.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Or other authorities.
Could face bigger challenges next.
Fed was going to keep rate World Cup. This is a 3
as the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and
beyond. Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in Zurich with conversations that matter, and here's what's coming up on today's program. UBS falls after earnings disappoint investors, while the Swiss bank says it will resume share buybacks this year, vowing to hand as much as $1 billion to shareholders in the second half. We'll bring you our interview with the chief executive, Sergio Ermotti.
One thing that we need to do is to be willing in the next couple of years to sacrifice a little bit of top-line growth in order to improve the returns on our financial resources, particularly on the balance sheet.
BP rallies after accelerating share buybacks as its new boss aims to woo investors while sticking to the company's clean energy strategy. Plus, Chinese markets soar amid promise of more support from Beijing. President Xi is said to be briefed on the country's stock slump. Now, let's take a look at the European markets map. Now, if you look at the general mood, I think it's being bolstered, and we're seeing a little bit of gains across the board. European stocks actually rising, bolstered by strong results from BP. Again, if you look at the global bond market, it's been a pretty eventful, I would say, 4 or 5 days. It seems to be a little bit steady now after the biggest 2-day sell-off in months. I look at Chinese markets, they're now closed, but again, there was a bit of signals about a possible economic recovery. And then a couple of other things we're watching out for. Again, UBS posting this net loss. Infineon Technology actually guided for lower than expected revenue this year as a German chip maker is hit by a broad slump in semiconductor demand. And then, of course, watch for BP. So we were just saying UBS shares lower after the Swiss bank missed estimates in the fourth quarter as it tries to move beyond the integration of Credit Suisse. Now, the negative reaction comes despite a better than expected dividend. In a wide-ranging interview, the chief executive, Sergio Ermotti, also told me about his plans to raise cost-saving targets by 2026.
It's a pivotal year because if you think about the journey, the first 6 months are very intense. I think we're going to go through the merger of the two operating entity, UBS and Credit Suisse AG, will merge in the first half of the year. The subsidiaries in the US and Switzerland will merge also during 2024. So this is the prerequisite to be able to realize our synergies. We already achieved $4 billion of cost savings, exit rate 2023. We now plan to have another gross savings of 9 billion between 24 and 2026. Partially, this will be reinvested in the business to make our platform more resilient and up to speed with the requirements, but also to invest in our future.
So, Sergio, how important was this investor update just to give a blueprint of the kind of growth that you want to, to attain and how?
I think it's very important for investors to understand how we are connecting the dots between what we said in summer last year and in respect of our long-term plans, in 2026 plans and going beyond that. So today we are providing few dots between 2024 and 2026, how we achieve cost savings, how we manage our balance sheet, how we want to manage growth that has to come in a sustainable way.
Now let's bring in Bloomberg's managing editor for finance and investing in EMEA, Tom Metcalf. So, Tom, if you look at the investor reaction, there was a little bit of questions right at the start on whether investors would focus on the positives or the negatives. What stood out for you?
Yeah, it's really interesting. For me, it was that return of the buyback, for one, and that sort of higher than expected cost savings. They're now targeting $13 billion. So, my read on this was, it's continuing to say the integration is going to plan. It's going to be a tough integration, but it's looking positive. I think it's interesting that, underlying business that perhaps a little bit disappointing there, and that's what, whether your glass is half full or empty is kind of probably how you're going to view these results.
Yeah, and Tom, it was interesting. So when I spoke to Arabati earlier on, I asked him how important 2024 was, and he says, look, it's a pivotal year. If you look at some of the liabilities, how much do they need to deliver the integration of Credit Suisse in the first 6 months?
Yeah, pivotal absolutely captures it, and I think he had a lovely line on the analyst call just now saying, in terms of deliverables, he's got to focus on, there's something like 6,000 for the next 3 years. So that gives you a sense of just how complex it is and, how many things could potentially go wrong. And that's probably why I think, as that sort of awareness seeps into perhaps shareholders, they are aware there is some downside here. And of course, against the context of UBS shares up something like a quarter in the last 12 months. That's a really impressive growth, and I suspect there's probably a bit of profit taken today as well.
Yeah, and the million-dollar question is, can you actually have an EU bank valued as a U.S. bank? And certainly that's what the shareholder activist wants to see from UBS. What kind of growth do they need to deliver on to make sure that actually they're valued like a Morgan Stanley or even a JP Morgan? Is that even possible?
Well, Sevian came out and said, look, post-integration, come like 2026, we can see a pathway to UBS having, I think, a return on tangible equity north of 20%. I have 25% in my head, which would be enormous, and that would be very un-European bank-like, I suppose. And that's the thing. There's always been this big disconnect between European banks, and is UBS able to bridge that gap? That's the big question, as you say. And certainly, if Immerse is able to pull that off, it will be completely transformed banking as we know it.
That's really funny. Very un-European. Tom, thank you so much. Tom Metcalf there with the very latest on some of the banking landscape. Now, we'll bring you, of course, our full interview with the UBS Chief Executive, Sergio Armati. That's a little bit later this hour. Now, we're also joined by Sanlam's global equity investment analyst, Hannah Gooch-Peters, and Bloomberg's Justina Lee. So thank you both for joining us. Hannah, when you look at, first of all, the bond market, they've had a wild ride over the last couple of days. Finally, a little bit of stabilization. Are you any closer to understanding what monetary policy from the Fed looks like?
I think that what we're going to see is that if we look firstly at the equity market, I think the equity market is telling us that that rates are going to come down a lot sooner than they perhaps will. I think we've had a lot of very clear sort of dictation from the Federal Reserve saying that they're going to wait for those inflation numbers to come back to that 2% target. So I think we're seeing a lot of volatility in the fixed income market, just around the news, around a bit of uncertainty. But I think that if we look through to the equity market, what that's actually telling us is that rate expectations were looking to come down much sooner than they actually are, and then we might see just a period of sort of moderation now while investors digest this.
Justina, what's your take? Again, we also spoke to Sergio Armati about this, and he was interesting on the Fed and saying, look, anyone who tells you what they think the Fed and inflation does is, I mean, he almost said, you know, we just don't know at this point, which means that you could have a lot of interesting market volatility, which for a bank is either good news if you're on the right side of the trade, or it could be bad news if you get it wrong. How much more volatility, Justina, could we see going forward?
Yeah, I think the extent of the Treasury rout over the last 2 days really tells you how far the market expectations are now adjusting. And I think it's, you know, because of two things, right? One is Fed officials, you know, not just kind of Jerome Powell, but also Neil Kashkari kind of really came out and emphasized that, you know, they would rather almost kind of cut kind of a bit later and make sure that inflation is on a right path and kind of make the opposite mistake. And of course, the other thing is the ISM number kind of really came ahead of expectations, and same with the jobs report last week. So it's not just that the Fed is patient, it's also that the numbers are telling us that this kind of disinflationary path is maybe not going as smoothly as we previously expected.
And Hannah, your investment strategy is actually brilliantly thought out, but extremely difficult to execute because you're looking for high-quality growth companies that are basically mispriced. Where do you see that pocket in the U.S.?
So in the US, of course, we've seen, and I'm not going to talk about the Magnificent Seven because I think it's, you know, very, very well publicized, but you've seen this huge bifurcation of returns between the largest companies in the world that have been driving the returns of the equity market over the past, say, year. And those companies that are lagging underneath, and it's tremendous the opportunities that we're starting to see in things like the largest US health insurer, for example, like United Health, and we've seen fantastic returns from other companies outside that, like Intercontinental Exchange, like Fiserv, for example. So I think if you're willing to look underneath those very, very, you know, mega cap companies that are now trading on exceptionally high valuations, you can actually look forward to much better return prospects than perhaps the market over the rest of this year, just because the starting points of those valuations are much better.
Hannah, are you expecting a correction, if not for the Magnificent Seven, for a part of the market that, if not overstretched, it seems to be certainly priced to perfection?
It certainly is, and I think that, you know, certainly parts of it are leaving very, very little margin of safety in terms of valuations. If you've got a pocket of stocks that are trading on you know, sort of between 2 and 3.5% free cash flow yield, then really there is no margin of safety there for those. But I think that what you've got is the rest of the market is actually looking much more reasonable in terms of valuation. So I don't think that we'll see a correction. What we might actually see on a headline level is the market trending sideways for some time being now, just while we digest the rest of this year. But I think that what we might see is a bit of a catch-up, particularly from the smaller cap stocks that have lagged so far behind the mega caps that are dominating the global equity markets.
Justina, do you have a main theme actually running through all of these earnings? It does seem, as always, I mean, there's nothing to write home about, but if you have very good earnings and give back substantially to shareholders, a la UniCredit or BP, you're going to do well in this kind of market. Is there anything else that actually, you know, gives us a common point for the companies that are doing well in this kind of environment?
Yeah, it's kind of interesting that, I mean, to your point about how hard it is to find high quality growth that's also reasonably priced right now. I mean, it's partly because this year there's been a really big bias toward, you know, large caps, quality, growth stocks, like everything that investors kind of feel safe with. And I think one theme is definitely, you know, the small cap underperformance. And one kind of trend that a strategist has picked up is, you know, we've kind of seen decent sales growth across large and small, but large caps seem to be better at turning that into kind of also an earnings beat. But I think kind of the debate here is small caps have been lagging for a really long time now, so those valuations are very attractive. And so I think if you're an active stock picker, there's probably more opportunity there if sort of you're sufficiently selective.
Which, Hannah, is what you and your team are trying to do, but how difficult is it to actually impress investors, again, given some of the expectations out there?
I think that investors at the minute are very focused on the short term. There's, you know, very short-term time horizons here. I think particularly given how strong the market was last year. I think that right now, if you're looking to exploit a longer-term time horizon, give a company time for the quality to assert itself, now is actually a really good period of time to be looking at these companies that have got the better, more compelling valuations, and you're willing to wait, say, 3 to 5 years for those companies to sort of grow into their grow into their quality, if you like. So I think it's actually a really exciting point in time if you're looking for companies that are able to sustainably grow their earnings over a long period of time with good balance sheets and, really importantly, sort of high barriers to entry, strong economic moats to those companies. There's a lot of opportunities out there. Like I said, companies like United Health, like Fiserv has done really, really well, and the exchanges, and there are many others. And I just think that if you are looking to have better return expectations going forward, that time for selectivity is now.
And Hannah, when you look at some of your stock picks, I mean, does healthcare actually provide a little bit of a better opportunity than others because it's not one of the sectors that has been the most loved in 2023?
Yeah, so again, there's a huge sort of diversion between sort of performers of like the health insurers, which do come under healthcare, versus something like an Edward Life Sciences, which has had a tremendous move over the past few days on the back of things like some of their products being approved. They're, of course, in a much faster part of the market that is sort of heart valve replacement technology, exceptionally high company, very strong balance sheet. But the market has been very quick to reward sort of those higher quality, higher growth companies. And I think a company like United Health, if you're willing to diversify your healthcare exposure, is still offering 13 to 16% earnings growth, including the impact of share buybacks. And I just think a sort of 5% free cash yield, a company with a moat like this offers a very sort of sustainable path to long-term returns. So it's about that diversification. If you can look at companies with medtech exposure, if you can look at companies with insurance exposure, the things they have in common is the ability to grow their earnings, strong balance sheet, and they are leaders in what they do.
Fabulous. Hannah and Justina both stay with us. Thank you for joining us. Hannah Gooch-Peters there from Sanlam, and of course our Justina Lee from Bloomberg. This is Bloomberg.
Buffett is somebody you've met and you know. What does he tell you about investing? He tells you to just do what he does, or what does he tell you?
Pretty much. I mean, one of the things, we have this great connection about the love for baseball. And the reason why Warren and I got to know each other is he insured my contract, the 252. I reached out to him and I said, Warren, now that we're business partners, maybe I can come see you in Omaha. I thought I would never get an email back. And Debbie, who's been with him for over 40 years, wrote back and said, how's October? I said, I'll be there because we're not going to the playoffs. And that led a series of 5 or 6 years where I go back to Omaha. And he said, Alex, you always want to be a gentleman. You want to be a great baseball player. And then the 2 rules of investing are, 1, never lose money. And number 2, don't forget rule number 1.
Of politics to the world of business. Every weekday at 5 p.m. Eastern Time, hosts Joe Matthew and Keely Lines deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power, live around the world every weekday at 5 p.m. Eastern, only on Bloomberg Television. Context changes everything.
It feels like the economy's been quite strong on the growth front. You got big jobs numbers, you got big GDP numbers, better than expected. But at the same time, we've had inflation better than expected, too. If we just keep getting more data like what we have gotten, we're well on the, I believe that we should well be on the path to normalization.
Well, that was the Chicago Fed President, Austin Goolsbee, saying more good data is needed before starting rate cuts. Still with us, a global equity investment analyst at Sanlam, Hannah Gooch-Peters, and Justina Lee of Bloomberg. Hannah, when you look at, so we talk about monetary policy, of course, day in, day out, trying to figure out what kind of data point the Fed, but also other central banks would feel comfortable enough to start cutting rates. And then there's a question on who goes first. When you analyze companies, when you look at actually what's investable around the world, are there data points that you look at to try and understand at least a first layer of what region looks more attractive?
I think the most important thing that we look at is the company's ability to sustainably grow its free cash flow over the long term. And so that's taking into account all capital expenditure. And I think that is really, that flows through to things like operating margins, but that's also really indicative of the moat of a company. And of course, net debt to EBITDA. So we're looking for companies that have very strong balance sheets as well. And I think that if you then take that free cash flow and look out 2 years forward, if a company is trading at 4% free cash flow yield or higher, then that generally we find is a good starting point in terms of valuations.
And Justina, for you, when you look at some of the Treasury moves and some of the FX moves, of course, monetary policy will be decided on certain data points. In the U.S., is it all about the jobs after that surprise Friday number?
Yeah, I mean, it's all about the jobs. It's all about inflation. But I think another interesting thing going into this election year is, how do Americans actually feel? Because if you look at the polling, one interesting trend this year has been that despite the very robust data, I mean, a lot of Americans actually don't feel like they're necessarily a lot better off, and that can actually split according to their partisan beliefs. And I think we're definitely seeing that in the University of Michigan sentiment data, even though overall it does show that Americans are feeling a little bit better about the economy.
Hannah, over the last 4 trading days, it was also all about China, whether the economy will be stimulated enough, whether some of the real estate crisis can be contained. How does China figure into your analysis?
I'm actually quite excited by the volatility in China. I think we've bought in positions like companies like Yum China, which are actually US listed, 100% Chinese exposure. But a company like that actually owns KFC China, for example. And the outlook for growth for a company like that, for the valuation you're getting, is phenomenal. They are looking to go from, say, 14,000 stores currently in China up to 20,000 stores over the next 2 years. So phenomenal growth in that part of the market, but exceptional balance sheet strength. Net cash on the balance sheet, very good margins. And like I said, the US listed, they've come back from around $60 to in the region of $35. I see that up about 5% earlier today. So I think a company like that, when you're willing to look outside of the US for very, very high quality businesses that are exposed to that Chinese growth story, I think you can find exceptional opportunities, but for more reasonable valuations than in some parts of the developed world.
Thank you both, Hannah and Justina. Sanlam's Hannah Gooch-Peters there in Bloomberg. Now, coming up, Infineon has cut its revenue guidance for this year as the chip maker sees a slump in demand from industrial customers. That's coming up next, and this is Bloomberg.
Was around so many powerful people in my entire life. From the time I got married to Robert Kardashian and had a whole ecosystem of businessmen and entrepreneurs and people running studios. And, any given day it would be the head of a studio and, just often paid attention without really realizing I was paying attention. And I had a very amazing education. I was a housewife. I was raising 4 kids at home. I had the most blessed situation, but at the same time, surrounded by these business situations that I didn't even realize were happening right in front of me, but I must have been absorbing it, because there's so many times I've like brought up in my mind one of those conversations that I had learned from. And so I think I had a very lucky and blessed existence that way.
Top names in climate finance are on Bloomberg.
I can't tell whether you're optimistic or pessimistic about climate finance.
A lot of great stuff is happening, but is it enough? No, it's not enough.
I'm biased. I'm a huge investor in both fission and fusion, and hoping that it comes in time.
Transition is not going to be an event. It's a process.
But at the end of the day, it's the right thing for the planet, it's the right thing for the industry, and there is business opportunity.
Welcome back, everyone. Now, Infineon Technologies has lowered its full-year revenue guidance this year as the German chip maker has been hit by a broader slump in semiconductor demand from industrial customers. So let's get more on this story with Bloomberg's Oliver Crook. Ollie, good morning. So take us through the numbers and what it actually tells us about the chip sector as a whole.
Yeah, Francine, overall, from the headline number, the results in the first quarter and the projections into the next one, it was basically a miss across the board here. And really what I think the focus is going to be for many people was that margin, the margin forecast. It was supposed to come in at 23.1% in the next quarter. Realistically, it's coming in at 18%. I think that was a lot of the focus in early trading, where we saw the stock down 3%. Then it went into positive territory, and then now down again about 2.5%. So the analysts kind of trying to figure out what to make of it. In terms of where it fits into the broader chip story, we see a continued narrative. It's a slowdown in the chips that go into industrial application. Where Infineon differs from many of the other chip makers is that they are really weighted towards the auto sector, which they are saying is still robust for the time being. About 50% of their revenue is in that sector. And also, of course, a third is from China. This is another thing that you have to wait to pay attention to. But they do expect a recovery in the second half of the year, so we'll watch closely for that.
Yeah, and I guess not all chip makers and chips are created equal, so it depends on where you are in the value chain. Ollie, thank you so much. Oliver Crook there from Berlin. Coming up, our full interview with UBS Chief Executive Sergio Armati. We talk about share buybacks, the Credit Suisse integration, and of course, their cost-saving targets. That's coming up next, and this is Bloomberg.
You formed a partnership with Penny Pritzker at some point to do parking, is that right?
Yeah, so when I was working at JLL,
that we went through this real estate recession in the early 90s, and the senior people at the firm said, let's do a retrospective on all these different asset classes to see what happened, how we overpaid, why we ran into so much trouble, what really happened in the marketplace. And when I did that, I recognized, wow, there were a lot of reasons why I liked the parking assets better than I did office and retail and industrial. And so I started really noodling on the differences between those asset classes and came up with a rationale to start a business in the parking space. But I crossed paths with Penny Pritzker, who later became our Secretary of Commerce. And she liked the idea, and she and I went off on this adventure together and built a real estate operating company in the parking space.
What happened was you were offered a money-losing women's basketball team, and you said, I want to be in the other sports as well. Is that right?
Well, yeah, you got to be smart about this.
UBS falls after earnings disappoint investors. The Swiss bank says it will resume share buybacks this year, vowing to hand as much as $1 billion to shareholders in the second half. BP rallies after accelerating share buybacks as its new boss aims to woo investors while sticking to the company's clean energy strategy. Plus, Chinese markets soar amid promise of more support from Beijing. President Xi is said to be briefed on the country's stock slump. So good morning, everyone, and welcome to The Pulse. Today, from Zurich, I'm still Francine Lacqua, though. Let's return to our top story this hour, and UBS shares are lower after the Swiss lender missed estimates in the fourth quarter. Now, that's despite a higher-than-expected dividend and plans to increase cost-saving measures following the integration of Credit Suisse. Now, here's our full interview with the company's chief executive, Sergio Ermotti.
I'm very pleased that we finished the year with a very strong momentum. We achieved a strong underlying profitability for the second quarter, for the fourth quarter, and also we saw clients confirming their trust in our organizations. 22 billion of net new assets, strong deposit inflows across wealth management and the P&C. We made good progress in winding down part of the non-core exposures, and also that has allowed us to then also reiterate the story that we are a capital. We want to have a dividend that is increasing progressively. So we have an increase of 27% of our dividend, and also in the second half of 2024, we will do a share buyback.
How would you describe 2024? I know your chairman has said in the past that it's a difficult year.
It's a pivotal year because if you think about the journey, the first 6 months are very intense. I think we're going to go through the merger of the two operating entity, UBS and Credit Suisse AG, will merge in the first half of the year. The subsidiaries in the US and Switzerland will merge also during 2024. So this is the prerequisite to be able to realize our synergies. We already achieved 4 billion of cost savings, exit rate 2023. We now plan to have another gross savings of 9 billion between 2024 and 2026. Partially, this will be reinvested in the business to make our platform more resilient and up to speed with the requirements, but also to invest in our future.
So, Sergio, how important was this investor update just to give a blueprint of the kind of growth that you want to attain and how?
I think it's very important for investors to understand how we are connecting the dots between what we said in summer last year and in respect of our long-term plans, in 2026 plans and going beyond that. So today we are providing few dots between 2024 and 2026, how we achieve cost savings, how we manage our balance sheet, how we want to manage growth. That has to come in a sustainable way. And also, we give also some indications about what to look forward after the completion of the restructuring, which is then going to enable us to harvest, the work, and we did with a quite attractive returns.
So how will you achieve this quality, sustainable growth?
I think that one thing that we need to do is to be willing in the next couple of years to sacrifice a little bit of top-line growth in order to improve the returns on our financial resources, particularly on the balance sheet. So I think that what we both was a very strong business in terms of client base, very good people, very good capabilities, but the balance sheet was not properly priced. We need to price risk in a better way, and that will help us to contribute to our financial targets for 2026 and beyond.
So exactly what does that growth look like? Is it, a focus on the U.S. or elsewhere?
Everywhere. I think that when you look at our wealth management business, we are planning to add around 100 million a year in terms of assets. This is basically the net numbers. We're going to want to grow more on a gross basis, but we are willing also to let some assets go that are not yielding what we believe is the appropriate level to cover for risk and capital cost. And then beyond that, we believe we're going to grow at around 200 billion. So if you think about what it is, we are recreating the business we just acquired. We acquired 700 billion of assets. In the next 3 to 4 years, we're going to build up organically the size of Credit Suisse again. So it's very important for us to do that, but in a sustainable way.
But for the U.S., for example, could we see an acquisition?
No, I think that the U.S., what we need to do is now to institutionalize our platform by giving more capabilities on deposits, on credit. We need to broaden up more of our global expertise in terms of CIO offering products, the asset management capabilities that are coming in. And what we need to do is also to allow and make it easier for our non-U.S. clients to book business in the U.S., because a lot of our global clients, they want to be also booked in the U.S., and this is a real opportunity. So we believe that by doing that, we're going to be able to narrow the gap to our competitors and setting the base for the next phase of growth.
Sergio, when you look at dividends and buybacks, how important was it that this was ambitious or sufficiently ambitious for shareholders?
I think is the beginning of a journey. The journey. So the fact that we are increasing our dividend by 27% is a good message of confidence. Share buyback are coming. We want to be prudent in the way we look at share buyback. We want to complete the first phase of the integration of the legal entities in 2024, but is to give a little bit of a flavor for where we want to go. By the end of 2026, we want to exceed the levels of capital returns we had before the acquisition. So I think that it's just a testament of our confidence and our ability to generate capital as we also manage the integration.
For the investment bank of Credit Suisse, I think you were winding it down by 2/3, or this was kind of the plan. Where are we on that journey?
I think that's everything that needed to be done in terms of segregation of the non-core activities has been done, and now we have the third that we think is going to add value to the combined franchise is operating. They are ramping up their productivity. They are now part of the business, and I see very good, promising starts. So we see we are winning mandates globally. So I'm very pleased with the momentum we see in banking.
When you look at the cost cuts, can you update us on any job losses?
There is no major changes in terms of what we were planning during the summer in terms of full-time equivalents reductions. So what we have been updating this morning is more exactly the size of the gross savings. We were talking about more than 10 billion. Now we are pretty precise on saying what it is more than 10, is 13. So, but as I said, it's very important to understand that we are cutting in order to create capacity to reinvest also in infrastructure and growth.
But it's impossible to exclude further job cuts, of course.
No, but it's a continuation, of course. I mean, more than 50% of our cost is headcount, and there are duplications, but we try to do it over time, also managing natural attrition and also retirements, early retirements. We do internalize much more than we had before in the combined entities, so that's also allowing us to retain many talented people across both organizations.
Bonuses. If I don't ask about bonuses, I'm going to have angry bankers email in. What can you tell us about bonuses?
Well, they already know the answer, so they don't need you to ask me the questions because we have communicated their bonuses. So,
but a good year?
I think is a year that considered both the financial performance, but also the efforts that were put into this. I'm very pleased with the efforts that our people brought into making the integration successful. They are integrating well in the culture. They see the upside momentum. So I think compensation is reflecting all of it, but it's measured and totally aligned with the UBS standards on how we pay people.
Sergio, you also have an activist shareholder who's increased, of course, their stake in UBS, Cevian. Have you had conversations? I mean, they're actually quite bullish on the UBS case, saying that you can double the share price in the next 2 to 3 years.
Oh, we are also very bullish about our future. So I think that's, I don't see anything in their investment case that deviates from our ambitions. So I think that's with the announcement of today, I think that we are also connecting a few dots with what they are looking and what we are looking, and so it's very well aligned.
Have you spoken to them?
We are always in contact with all major shareholders.
But in terms of valuations, I think that this would mean that an EU bank would match valuations of US banks. Is that possible?
Valuation is not to us to determine. Shareholders and the market will determine valuations. We will deliver results, and the market will put their own view and multiples on that.
Sergio, what kind of market are you expecting this year? Again, there's quite a lot of volatility as you know markets reprice what the Fed does, what a lot of central bank does. What do you think they're getting wrong?
Well, I think if you ask me what they're getting wrong is to pretend to know when you don't know. I mean, the truth of the matter is that the uncertainties that we see from many areas, not only the macro, more traditional economic indicator, which they seems to be much more volatile and unpredictable than we had in the past, but also the geopolitical situation, and also the emotions and the psychological effects on consumers and investors is a factor that is very, very complex to manage. I still remain convinced that the market has been too complacent early on this year about the Fed and central banks cutting so rapidly. The last mile of inflation fights seems to be more challenging. And I do think it's prudent for central banks to stay focused on fighting inflation because it creates unwanted consequences if we keep inflation way too high compared to the original targets.
And so how does that change client behavior?
For the moment, we see a little bit of clearly seasonality, and there is a concrete hope that rates will come down, and but the uncertainty is still there, and but we look positively for the first quarter of the year, but you know, we do have to expect still continued volatility in the markets.
Well, that was the UBS Group Chief Executive Sergio Ermotti speaking to us here in Zurich. Now, coming up, the U.S. Secretary of State Antony Blinken continues his 5th Middle East tour since October 7th. We'll discuss what he can achieve this time. That's next, and this is Bloomberg.
think this will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried had pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some point that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in?
I'm in.
I'm in.
We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
Nobody brings you top names like Bloomberg.
The point is that the economy is doing very well in the Netherlands, but the election was very much focusing on migration.
They had made 26 attacks. We'd given warning after warning, but we hadn't taken action.
Parliament has to stick to this. It has to comply with the debt brake. The debt brake is really a good ally.
I think we have made addressing inequality a key sort of driver of our policies.
Bloomberg. Context changes everything.
So the U.S. Secretary of State is due to meet the leaders of Egypt and Qatar on his 5th tour of the Middle East since the October 7th attacks on Israel. Now, Antony Blinken held talks with the Saudi Crown Prince, Mohammed bin Salman, in Riyadh yesterday as he started his tour. Now, let's bring in Bloomberg opinion columnist Mark Champion. Mark, always good to speak to you. So what will Antony Blinken actually be focused on? Is it hostages or U.S. strikes in the region?
Well, I'm sure they'll be talking about both, but the big task, the one is in the gift of the U.S. It controls the process, so it'll be mainly explaining and trying to make sure that he gets support for what the U.S. is doing in terms of hitting the Iranian-backed militias in Iraq and Syria. The other is trying to get a peace deal negotiated between Israel and Hamas. That's not in his power to do on his own. So he's really trying to rally as much support as he can. The kind of key negotiator is the Qataris, because they have a direct connection, long-standing connection with Hamas. And at the moment, the ball is sort of, as the Americans have said, the ball is in Hamas's court because the Israelis have given a proposal or a counter proposal, and we're waiting for Hamas to say what they think about that. But it's a tough, he's been very busy trying to, get some sort of, if not a solution, at least to, reduce the level of the fighting in Gaza, simply to try and prevent escalation from spreading elsewhere in the region, and that's a tough task, and he's sort of in the thick of it now.
Mark, do you have any insight into what the relationship is between President Biden and the Prime Minister of Israel? I don't know whether there's also going to be any deterrence to really try and minimize the civilian casualties in Gaza.
Yeah, I mean, they don't have a great relationship. They have some history, and Biden is a huge supporter, lifelong supporter of Israel, and hence he came out very strongly when the attacks occurred, earlier in October. But personally, he and Netanyahu are on the opposite sides of the kind of ideological fence in terms of where he thinks that how he thinks that Israel should conduct the war, how he thinks that Israel should figure out a long-term solution to the Palestinian question. They're very much on opposite sides of the fence on that, and that becomes harder and harder to manage as time goes on.
And the threat, of course, of a bigger conflict on Israel's northern border remains.
Absolutely, and that You've heard warnings. There's like a drumbeat of warnings coming from the people who really count, like the defense minister, the chief of staff, and they've been saying very clearly there is we would like a diplomatic solution whereby Hezbollah withdraws to the line that was made in a UN Resolution 1701 back in after the 2006 invasion, the war that then when Israel moved into Lebanon. So there was Hezbollah is supposed to be behind this line, which is somewhere between 5 and 20 kilometers because it follows a river that kind of waves away from the border. And Israel is saying, we won't wait forever. We need for our people. There's somewhere close to 100,000 of them who've been withdrawn from around the border to safety. We won't wait forever to get them back. And in order to do that, we'll insist by force, if necessary, if we don't get a diplomatic solution, that Hezbollah does withdraw. So, you've seen, several statements like that in the last week to 2 weeks. So that is definitely a concern also.
Mark, meanwhile, billions of dollars in aid for Ukraine and Israel, hanging in the balance. What more do we know about this U.S. Senate deal?
It's looking very bad. So there was a kind of committee level agreement, and the details, were sent out. And within 24 hours, you had even Republican supporters of the deal turning against it. It seems to be because Donald Trump went onto social media saying that this would be, a disaster for the Republican Party and a terrible deal. So it seems as though the Republican, there were a number of Republicans saying that they thought that the deal was dead. It isn't yet, but it looks like it's going to be delayed for at least a few weeks. So that in itself is a problem for Ukraine, a major, major problem.
Mark, thank you so much. Mark Champion there from Bloomberg Opinion. Of course, Mark will come on to give us any updates as and when we have them. Now, BP, one of the biggest gainers on the stock 600 as fourth quarter profit beat estimates. We'll be discussing the new chief executive and his strategy next. This is Bloomberg.
Warren Buffett is somebody you've met and you know. What does he tell you about investing? He tells you to just do what he does, or what does he tell you?
Pretty much. I mean, one of the things, we have this great connection about the love for baseball. And the reason why Warren and I got to know each other is he insured my contract, the 252. I reached out to him and I said, Warren, now that we're business partners, maybe I can come see you in Omaha. I thought I would never get an email back. And Debbie, who's been with him for over 40 years, wrote back and said, how's October? I said, I'll be there because we're not going to the playoffs. And that led a series of 5 or 6 years where I go back to Omaha. And he said, Alex, you always want to be a gentleman. You want to be a great baseball player. And then the 2 rules of investing are, 1, never lose money. And number 2, don't forget rule number 1.
Now, BP, one of the biggest gainers this morning after it announced a bigger than expected buyback of shares. Now, the oil and gas major posted fourth quarter profit that exceeded estimates. Let's get more from Bloomberg's James Heron. James, thank you for joining us. So what are you reading into the accelerated share buybacks?
Well, I think the message is clear, and it's all about persuading shareholders that they can rely on BP to deliver high returns even as it transitions to low-carbon energy. And this is it seems to be a direct rebuttal to some of the shareholder activism that's been happening in recent weeks, like notably Bluebell Capital, who are criticizing the company for moving too fast away from oil and gas and basically leaving money on the table as a result of that. And the message today seems to be we can give good shareholder returns and stick to our strategy.
So what can we take away about the new chief executive and actually his plans for clean energy?
Well, he was seen very much as the continuity candidate when he was nominated last month. He's definitely sticking to that, but he's being a bit more forceful in his defense of the strategy. It's not just the buybacks. He's talking today about the fact that BP will keep lowering its debt, that it's not planning any new big acquisitions. It's made a few in recent years, and now there's a period of consolidation, getting operations from them. So it's a message of sort of continuity, competence, and trying to convince investors that in the long term they can rely on BP to give good returns.
James, thank you so much. James Heron there with the very latest, of course, on BP. Now, let's take a look at some of the other top movers in today's trading session. So UBS, we've been covering it all day. In fact, that's why I'm here in Zurich. UBS will resume share buybacks this year, vowing to hand as much as $1 billion back to shareholders in the second half as it seeks to move beyond the integration of Credit Suisse. Now, we're seeing a bit of an acceleration in, of course, the share price loss, down 2.5%. Bayer suffering a blow to its efforts to finally put a lid on expensive litigation after the Germany company actually lost one of its two actions before a U.S. federal appeals court over the weed killer Roundup. Bayer down 2.3%. Then Morphosis shares jumping after Novartis agreed to buy the German biotech company for around 2.7 billion euros. And that's, of course, adding to the drug maker's cancer treatments to its pipeline. So you keep Morphosis gaining 3.9%, Novartis down 0.5%. Up next to Bloomberg Brief, Danny Berger and Manus Cranny in New York. They'll talk about treasuries, markets, and they'll have, of course, a full roundup of European banks, including UBS. This is Bloomberg.
One of my greatest advantages, I own my company 100%. No board of directors. I make a decision, we move. And I had a guy say to me, runs a big media company. This guy ran a major division, Warner Discovery. Okay. It was just Warner Media at that time. He says, you know what, when we sit in our meetings, We don't talk about Disney. We don't talk about Paramount. We don't talk about Sony. He goes, you know who we talk about? I go, who? You. I said, really? He goes, yeah, you. I go, why? He goes, we are giant battleships, and you're like a little speedboat. And if there's gold on the beach, you run rings around us, get to the beach, take the gold, and by the time we turn our battleship around, you've already taken the gold. I go, that's right. I'm always gonna be that entrepreneur. I started my company from my dining room table 30 years ago. 30 years ago. And I started by calling every television station, asking them to carry my once-a-week show. On average, they all said no 50 times, and I worked through about 50,000 no's to get 150 yeses. That guy that was at that dining room table trying to pay his phone bill is that same guy today, 30 years later. That fire is still in my belly. I still run scared, and I'm still running after that vision of building the world's biggest media company.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
This is Bloomberg.
Good morning from our world headquarters in New York. I'm Manus Cranny.
And I'm Danny Berger. Welcome to Bloomberg Brief. Let's set your agenda.
UBS drops on a wider than expected loss despite the return of $1 billion buyback.
BP also announcing buybacks as the oil giant's new CEO seeks to woo investors while sticking to the company's clean energy strategy.
And Treasury stabilized after a severe sell-off on the strong data. 10-year yields saw its biggest two-day jump since June 2022. You were on holiday in June 2022. Let's have a look at... having a day off. Let's have a look at these bond markets, because we put on 27 basis points in the space of 2 trading sessions, and that kind of velocity is going to be hard to sustain. You've got a tick lower this morning, 415. You are going to have a serious auction fever this week. Of course, it was a 1-2 punch on the bonds. You had the 60 Minutes interview from Powell. Then you had the ISM services at the highest in 4 months. But today, we'll have the 3-year paper, $54 billion of threes. Then you've got tens. The auctions mind up. $121 billion worth of auction paper. How much appetite? We're down 11% since the start of the year. There are 1,000 projects out there, 25 cities that need $52 billion worth of funding. That's the reality of iron ore on the dip. Danny, good morning.
Good morning, Manus. Making things worse yesterday, too, was those hawkish comments from Neil Kashkari. Kashkari also saying that, look, the neutral rate has moved higher since the pandemic. Things are different, and you don't need to cut as soon as we need. That meant stocks came off of fresh highs. We are trying to claw our way back, but we're essentially unchanged on S&P futures. Amundi says that we are overhyped with tech, and we're too confident in disinflation. Therefore, stocks are 20% overpriced. China, a stellar day, up 3.5%. Current reports suggest that Xi himself is starting to be worried about the equity sell-off, and maybe he'll step in to support things. Finally, European stocks, little change. If you look under the surface, you can see why. BP up, $3.5 billion worth of buybacks. UBS down. Manus, we're about to talk about this, so I won't spoil it. But of course, they had earnings, higher costs, disappointments when it comes to that. But when it comes to this big picture story, Manus, you showed us the bond markets, that big sell-off since I was on holiday in June 2022. Part of the reason we're so vulnerable is positioning. Let me show you this chart, because positioning does seem to be overstretched. You can see it continued to tick up in recent weeks, and that essentially means that when we get that kind of hot data, Manus, there's more firepower, there's more potential that things will sell off.
But this comes down to the concentration risk, Danny, doesn't it? It comes down to concentration risk and the long extension in the Mag 7 in the equity market, this concentration risk in the bond market. And if you break that down a little bit further, as you sent to me this morning at 3:30 when I drifted in, I was late this morning, 85%, yes, I was late, 85% of the extension is in the foreign owner base. And of course, when the Bank of Japan moves, this is going to interrupt a lot of the concentration, especially from the foreign owners. There's going to be a yield advantage in Japan, maybe, and this can upset the flow. But it's going to be about the supply this week.
It is. Big supply, and I should just say the fact that it's also foreign buyers also underscores this whole thing of, oh, it's just the basis point trade. That's why everyone's long. It's not just that. There's more risk than just that.
You should get the basis point trade in before it was all said and done.
I mean, it's 5 a.m. Got to talk about the basis point trade, right? Isn't that the rules?
I know. It's too much. She's arrived with a whole new agenda. She wants basis points.
I'm still jet lagged. That's the problem.
Yeah, but the hair's good. Right, let's talk about UBS. The shares are dipping this morning. The earnings missed. And that overshadows probably the better-than-expected dividend, Danny. The CEO, Sergio Motti, spoke to Francine Lacroix a little bit earlier in Zurich.
I'm very pleased that we finished the year with a very strong momentum. We achieved a strong underlying profitability for the second quarter, for the fourth quarter, and also we saw clients confirming their trust in our organizations. 22 billion of net new assets, strong deposit inflows across wealth management and the P&C. We made good progress in winding down part of the non-core exposures, and also that has allowed us to then also reiterate the story that we are a capital. We want to have a dividend that is increasing progressively. So we have an increase of 27% of our dividend, and also in the second half of 2024 we will do a share buyback.
How would you describe 2024? I know your chairman has said in the past that it's a difficult year.
It's a pivotal year because if you think about the journey, the first 6 months are very intense. I think we're going to go through the merger of the two operating entity, UBS and Credit Suisse AG will merge in the first half of the year. The subsidiaries in the US and Switzerland will merge also during 2024. So this is the prerequisite to be able to realize our synergies. We already achieved 4 billion of cost savings, exit rate 2023. We now plan to have another gross savings of 9 billion between 2024 and 2026. Partially, this will be reinvested in the business to make our platform more resilient and up to speed with the requirements, but also to invest in our future.
That was Sergio Motti, the UBS CEO. Let's bring in and have a conversation with our very own Tom Metcalf. Tom, stocks are down. Net new money's on the up. The share buyback is there. You know, that was about the self-protectionism mechanism when they went after Credit Suisse and did the deal. So why are we languishing on the back of what should be good news? Was it the top line?
Yeah, I mean, it's interesting. Always with earnings, I play this game of guessing whether the shares will go up or down once I've seen the results. And this time I was actually thinking, you know what, it's pretty solid. I'd expect UBS to be flat. So, you know, the market's down a little bit. I suspect it's in part a reflection of the fact UBS shares are up something like a quarter over the last 12 months. So maybe there's a bit of profit taken out there. And if you're looking for bad news in this, it's really, yeah, that underlying business. You know, it was a bit worse than expected, the results on some levels. But for me, in the round, you know, this integration story is what everyone should be focused on. And there, again, the messaging was very clear. They set out a new time, you know, this sort of a clearer time frame, and seem to be still relatively on track for that. So for me, I think it's been an okay day for UBS.
Yeah, an okay day, but again, Tom, some shareholders might disagree with you. I mean, we heard Ermati there saying that it's a pivotal year for UBS. Put that in context. What does UBS, what does Ermati need to achieve for it to actually be a pivotal year?
Well, a lot of things are going to happen. For one, the integration is slated effectively to complete in the third quarter. They're also going to set up a US holding company pretty soon, I think in the next quarter or two. For me, the number that really stood out was Ermati said, actually on an analyst call, that he has something like 6,000 deliverables to do in the next 3 years. So that gives you a sense of just how much of a slog it's going to be, just how sort of difficult the integration is.
6,000 deliverables.
And that's the big question, right? Yeah, imagine that, eh?
I mean, could you imagine your inbox?
What if we did 6,000 deliverables for this show?
Oh.
Do you think the producers would survive that?
I don't think the producers would survive that at all. And then, of course, they've got an institutional shareholder to contend with as well.
Yeah, yeah. Tom, tell us more about that.
Yeah, exactly. So that came out late last year. Cevian, big activist shareholder, has come out and said, basically said, look, we support the integration, and once that's done, we expect, the returns to be even higher than UBS are guiding towards. So it's all very, very friendly on that front for now. No word from Cevian really since then, but that is something we are watching very closely. Every company, if you've got an activist shareholder, inevitably, that's something everyone's looking at closely.
All right, Tom, I expect you to keep track of each of those 6,000 deliverables. We'll get updates how they're going. Tom, thank you so much. Bloomberg's Tom Metcalf. All right, Manus, let's talk about some of the stories that are trending on the terminal this morning. You mentioned it in Australia. The RBA held rates at a 12-year high, as predicted by economists, but the central bank also signaled a higher bar for additional tightening as inflation slows, though it added that a further increase in rates can't be ruled out.
Mounting pressure from the top U.S. watchdog led to New York Community Bank's surprise decision to slash the dividend and stockpile cash. That's according to people with direct knowledge of the matter. Two senior executives in audit and risk left their positions in the months before NYCB unveiled the measures.
Blackstone is said to be considering a bid for skincare company L'Occitane. Sources say Blackstone is considering the possibility of teaming up with L'Occitane's billionaire chairman on a buyout. The Hong Kong-listed company has a market cap just under $5 billion. Manus.
And Infineon, Danny, forecasting lower than expected revenue this year amid a broader slump in the semiconductor demand. The German chip manufacturer says the second quarter is expected to be particularly difficult in sales of power and sensor chips for industrial applications.
Coming up, BP, one of the biggest gainers on the Stock 600 this morning. We're going to discuss their new CEO's plans here on The Brief.
You formed a partnership with Penny Pritzker at some point to do parking, is that right?
Yeah, so when I was working at JLL, that we went through this real estate recession in the early 90s, and the senior people at the firm said, let's do a retrospective on all these different asset classes to see what happened, how we overpaid, why we ran into so much trouble, what really happened in the marketplace. And when I did that, I recognized, wow, there were a lot of reasons why I liked the parking assets better than I did office and retail and industrial. And so I started really noodling on the differences between those asset classes and came up with a rationale to start a business in the parking space. But I crossed paths with Penny Pritzker, who later became our Secretary of Commerce. And she liked the idea, and she and I went off on this adventure together and built a real estate operating company in the parking space.
Nobody brings you top names like Bloomberg.
The point is that the economy is doing very well in the Netherlands, but the election was very much focusing on migration.
They had made 26 attacks. We'd given warning after warning, but we hadn't taken action.
Parliament has to stick to this and has to comply with the debt brake. The debt brake is really a good ally.
I think we have made addressing inequality a key sort of driver of our policies.
Bloomberg. Context changes everything.
It's Bloomberg Brief. I'm Danny Berger, alongside Manus Cranny in New York. Manus, let's talk about the bipartisan deal on to impose border restrictions and aid to Ukraine. Well, it's falling apart in the Senate. Former President Trump has ripped the bill, posting, "This bill is a great gift to the Democrats and a death wish for the Republican Party. It takes the horrible job the Democrats have done on immigration and the border and puts it squarely on the shoulders of the Republicans." Joining us now is Bloomberg opinion columnist Mark Champion. Mark, we talked yesterday how this border deal alongside Ukrainian aid was so close to passing the Senate. Why the last-minute switch on these Trump comments?
Yeah, it just seems, it was always going to be very tough in the House. It just seems like the Republican senators who had, agreed to it in the committee, that they then backed off after Trump intervened because they understood that, politically that it's just not going to happen at the moment, at least. So, some have said it's basically dead. And others that, it's not dead yet, but we're going to have to, look at amending it and spend a few weeks working on it. So it's looking very bad indeed for getting that deal through, which is really bad news for Ukraine, which desperately needs the money and the weapons that it was there to pay for.
Yeah, I mean, this is the long reach of the presidential contender. Let's talk about Antony Blinken. He is on his 5th trip to the Middle East. He's going to meet with Mohammed bin Salman. He's also meeting with the leaders of Egypt and Qatar a little bit later today. I mean, the State Department are saying that this is about an enduring end to the crisis in Gaza. He's got a couple of big messages to put across on this trip, hasn't he?
Yeah, absolutely. So he's got, 2 things going on. One is the U.S. strikes on Iranian-backed militias. And I'm sure that he's just, explaining what the U.S. is doing and making sure that everybody's on board. And so far, they have been quietly, but they have been on board with that. But then the much harder part, because it's not in the control of the U.S., is to get Hamas and Israel to agree to a durable ceasefire, at least 2 months, and then see where it can go from there. It would involve, the release of hostages, release of Palestinian prisoners, but it's going to be very difficult. There's a lot of, gaps. The State Department is sad. There's nothing imminent because it is tough. So he's been to see the Saudi Arabia. He's in Egypt. He was in Egypt this morning, and he'll be going on to Qatar, and it's the Qataris who have strong links with Hamas. And they are the kind of key to trying to get the Hamas to come on board with the deal. Mm-hmm. At the moment it's in Hamas's court. The Israelis have made an offer.
Well, certainly the Qataris have more access, perhaps, and influence with the Hamas regime rather than the rest of the neighbours. Mark, thank you very much. We'll track the Blinken meeting over the next couple of days. We'll bring you the breaking news lines. Mark Champion there at Bloomberg Opinion. Let's pivot to BP, staying with the oil, but in a different theme. The stock rising this morning. The fourth quarter beat estimates. The oil major announcing an accelerated buyback program. What does that mean? James Harron joins us now. So this is a commitment by the new CEO, Murray Auchincloss, really to deliver buybacks, and that's his sort of stamp on day one of these results, isn't it?
Absolutely, yeah. Recently there's been some criticism from BP shareholders about its clean energy strategy. They want it to move more slowly away from oil and gas, saying that it can't generate good returns from renewables. What we've seen today is really a rebuttal from the company to that. They're saying, we can do the clean energy transition, but we can give you strong returns into the long term, and so stick with us.
What does it tell us about the strategy and style of Auchincloss, of Murray Auchincloss and his clean energy plans?
Well, it's very much a continuation of the strategy from his predecessor, but the rebuttal, the defense of it is a bit more forceful. We've got the buybacks. They're talking about sort of backing off from acquisitions for now, really restricting capex, keeping a tight rein on it so that they can give more of their free cash flow back to investors, which really in the oil and gas sector now, that's what we see investors want. They want big returns from the companies, and if they can get that, then they're willing to buy more shares, and you see the price going up this morning to reflect that.
Okay, it's a nice bounce there on his first set of results. James, thank you very much. James Harron in London. This takes us back then to Friday, and you and I coalesce around the same thing. If you look at the buybacks that Chevron are doing and that Exxon are doing, I think I put it in the chat there. If you look at Exxon, they are doing $20 billion of buybacks, and you look at what BP has just committed at $1.75 billion. It just shows you the differential between the two.
Yeah, it does, but the buyback story in general, because UBS wants to do buybacks at the end of the year, it does feel like we're seeing the the shift of companies who were concerned about the economic environment, wanting to be conservative, to now saying, maybe we don't need to be, maybe we can reward shareholders?
Okay, I mean, we're going to keep an eye on that. I mean, between job cuts in tech and buybacks, I mean, they're two sort of evolving themes in this reporting season. But let's talk about commodities, because you've got, again, the lack of war premium in this oil market. You've got a stronger dollar. Let's have a look across the commodity complex and give you a quick snapshot this morning. You've got natural gas up 0.5%, crude again flat, Danny, 72.77, but there's no excessive war premium in that. We'll have more for you on the markets in just a moment. We're going to go fast to Formula One. What do we mean? Well, you've got to come back to hear what that is.
Regional sports networks. There's a lot of, it's a business that seems to be collapsing. Leagues have sort of toyed around with, should we do something ourselves? Some teams are doing like local TV and streaming. How do you see that shaking out?
So I don't think I'm right on this, but my instincts keep telling me this is what's going to happen. Because if you remember the WWE, they launched their own network that had their own content and had their own pay-per-views. And it was kind of a smart, bold, ahead of its time move. And then they pivoted at the perfect time and they sold their content to, what was it, Peacock?
Yeah.
And that was really smart too, because they were able to leverage that number as high as possible. So they always zagged where the money was and when the opportunity was. I think the opportunity for the NBA with the local teams would be to own all that themselves.
Or other authorities.
Could face bigger challenges next.
It was going to keep bringing World Cup. This is a 3
as the economic picture
covering the intersections of Hollywood, Silicon Valley, and beyond.
This is Bloomberg Brief. I'm Danny Berger alongside Manus Cranny in New York. Manus, you had a bit of a field trip yesterday after the show.
I know you had a little bit of a field trip after the show. I mean, we're living proof. I'm surprised you came back.
I'm surprised I did too. Well, it was all over my Instagram, if anyone missed that. I was very excited about it because Formula One kicks off this month. Manus knows I'm a big F1 fan, and one of the biggest shakeups of this industry this year, of course, is Lewis Hamilton leaving Mercedes and joining Ferrari. Now, I caught up with the Williams racing team, specifically the drivers Alex Albon and Logan Sargent, as they launched their 2024 livery here in New York. Take a listen to what they had to say about Lewis leaving Mercedes.
It was a surprise. I think everyone was surprised to see that. It's definitely a brave and bold decision. I think if that's what Lewis felt like he needed to feel, more motivated than ever to keep improving, then you have to respect that. But I think it's going to shake things up a lot. I think it's going to be a chaotic season with, a lot of drivers fighting for seats now. There's fighting for seats now, and yeah, I'm sure it's going to be, crazier than ever, to be honest. I think it's going to be a bit like the Hunger Games.
For the sport itself, it's been amazing to see the hype and the noise around Lewis's announcement. I don't know about you, how early you knew about it, but normally drivers, we get a bit of an inkling over these kind of news, and I had no idea. And woke up, I was in Spain at the time, saw this news, I was like, this can't be real, it has to be a rumor, as there are so many rumors coming out right now. But it wasn't, clearly, so good for him. And I think it's just going to make these next couple of years, especially you can see how fluid and how the driver market's, 2025, 2026, that's a year and a half away, or a year away, year and a half for other times, but it's all being done now, which is quite strange.
Do you expect more drama, more shakeups?
Yes.
I still can't get over that, Manis, of Logan Sargent saying that the season's going to be like Hunger Games.
I think it's brilliant.
I said, I hope everyone survives it. Hunger Games, that's such a dramatic metaphor.
I think it was interesting is that they usually get a little whiff of what's coming.
Yes.
But nobody had a whiff.
Well, they're all friends, right? They talk to each other. They usually know, and there you hear Alex saying, I thought it was a rumor.
So the question is then, does Alex step up into Mercedes? Did you ask him, is he going to leave?
Oh, of course I asked him, Manis.
What was his facial expression? Did he hold a tight face?
Great poker face. I basically said to him, I said, have you had any conversations with Mercedes? Very common for Williams drivers to leave and eventually go to Mercedes if they're good enough. Alex is very good. He said, I'm here, I'm committed for Williams. I can't say whether or not I've had any conversations. I should also say I spoke to the team principal too. I asked him the very same thing, and he said, I opened up our finance books to Alex. I showed him how many investments we were getting, and he wants to stay with us.
But then this comes down to dreams come true. It's a bit like, so long as nobody poaches her away from me, I'm absolutely fine. But it's like, where in Formula One do you want to live? And probably the iconic badge of Ferrari is where you. What is Ferrari is where you want to be. I just want to know, did you get any merch? Where were you yesterday?
This was at the Puma store. So that's Jenson Button, who's also a famous F1 driver, all the way over to the left. They were launching the car at the Puma store. Very cool merch. I may have snagged a sweatshirt.
Corruptible levels of merchandise?
No, not corruptible. All within the Bloomberg gift policy. But the other funny thing is I said to Alex, Alex, what's the worst investment you've ever made? Gotta ask him a Bloomberg question. He said, I bought a Mercedes G-Wagon, and it got broken into in London. So I got a second one when that one was destroyed, and it was broken into again. And I said, please stop buying G-Wagons.
But then, of course, she told him about Oliver Crook's piece about a baby G-Wagon, and he's in the market for that.
He's in the market. His first car was a Mini Cooper, so I was like, it's a hybrid between the both. You got to get a Mini G-Wagon. So I may have sold him on another car.
Very good. Well, listen, we're looking forward to it. What have we got tomorrow? We've got the team principal tomorrow and the drivers, so it's 2 for 1?
Yeah, so tomorrow we'll have my full sit-down interview with the team principal, James Vowles. That will be on Bloomberg Brief tomorrow. Very comprehensive and interesting interview.
I got to say, I did go to Monza once.
Did you? How was that?
And I was in the briefing room with Lewis Hamilton just before the race.
Did you see
She's not the only one that does a bit of Formula One on the show.
Did you get a hint of him wanting to do Ferrari Red?
This was a few years ago. I was younger. I was almost as fresh-faced as some of the drivers that you've just
still are, man.
Fresh and young on Bloomberg Brief. We're going to talk about UBS in just a moment and where you should put your money with the CIO, Kevin Ma.
So many people say the only way to really deal with climate change is kind of eliminate oil and gas and then have more clean energy. Is it realistic to eliminate oil and gas in the foreseeable future?
You actually have to at least mitigate it.
I think you have to bring a lot of it down and replace a lot of it, but you also have to, you can also have a huge impact by trying to do things like carbon capture and so forth, right, and around it. And it's going to take both approaches. Even today, greater than 80+% of the way the world operates around energy right now is still fossil fuels, you know, when you kind of look at it. And probably what's more striking is the fact that the demand for it is going up every year.
Things like solar or wind, it's nice and environmentally friendly, but really is not going to produce enough energy to really replace oil and gas in my lifetime, I assume, right?
Well, not by itself. So let me just say, solar and wind are critical components. You need, this is going to be sort of a collective effort with a lot of different technologies that are each going to come in and take their piece. But we do a breakthrough. We look at technologies that could produce half a gigaton, remove half a gigaton of carbon a year. And the way to think about that number is that we have to remove, say, 100 half a gigatons, you know, a year in terms of what we have to replace.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question.
Great question.
Best question I get all night.
Bloomberg, top experts, great questions.
Welcome back to Bloomberg Brief. I'm Manus Cranny in New York.
And I'm Danny Berger. Here's what you need to know.
UBS drops on a wider than expected loss despite the return of $1 billion buyback.
BP also announcing buybacks. The oil giant's new CEO seeks to woo investors while sticking to the company's clean energy strategy.
And Treasury stabilized after a severe sell-off on the strong data. The 10-year yield saw its biggest two-day jump since June 2022.
Manus, what can derail this equity market? Maybe nothing. It did trend a little bit lower yesterday.
Nothing can stop us, Danny.
Well, nothing can stop us. I know that. But maybe this equity market is a different story. So S&P 500 futures are slightly lower this morning. They dipped yesterday. That was off the back of a hotter ISM. We also heard from Kashkari saying that the neutral rate has moved higher. All of that, and then Powell on Sunday saying that you don't want to move too soon for cutting rates. So we come in ever so slightly from those all-time highs. Amundi says stocks are overpriced by 20%. China jumps about 3.5%. We continue to get this slow rollout of support measures from Chinese policymakers, but reports are that Xi is now looking into the equity market too. So if it's coming from the top, maybe there's more action to come. European stocks, two different huge earnings that hit the tape, Manus. It was BP, $3.5 billion buyback. We're all excited about that. UBS says we're going to have a buyback at the end of 2024, but in the meantime, it's that top line cost. But hey, still a buyback party. We'll take it where we can get it, Manus.
Take it wherever you can come. 27 basis points of a backup in yield. Is that rich enough for you to step in? You've got auctions aplenty this week. $30 billion worth of supply from the corporate side coming as well. Treasuries give a tick or two back this morning. As I say, it was a double gut punch. It was the Powell narrative on 60 Minutes and the jobs report, followed by the ISM services, which was pumping up at a 4-month high. On the slate, you have $54 billion worth of 3-year notes, 10s and 30s coming this week. A hawkish hold from the RBA. This is where the risk is that further hikes can't be ruled out. Aussie goes bid. I mean, the dollar's had a fairly strong run. You're looking at the highest since November, but the Aussie manages to galvanize itself on this hawkish hold from Michelle Bullock. It is her first outing as the central banker for the RBA, and she is laying down the marker of the business that she intends to deliver. Iron ore is down by 0.9%. You're at a 3-month low. That is, you're looking at steel production dropping quite aggressively in China. They've got 1,000 projects standing, 25 cities, and they need $52 billion worth of funding. This is the reality in the commodity complex on the China story. Danny.
You have troubles in China, but still, Manus, you have this resilience of the American economy. One of the things I think is quite remarkable is Deutsche Bank. They were really the first bank to come out and say, we're expecting an American recession. But Manus, they just had a note out last night saying, we don't expect a recession anymore. I think that really captures the change in zeitgeist of recession doomsdayers just all having to throw in the towel.
But then this is the no landing scenario, which again, embellishes the view that the Fed is not necessarily in a massive hurry to cut. She sends lovely little messages anywhere between 2:30 and 3:30 in the morning. And of course, did you read the Neil Kashkari story from yesterday? Yes. But the Kashkari point is, I had read it skimmed it very quickly. But the bottom line, it is about the neutral rate, and the neutral rate does what for the Fed?
Well, I mean, it means that they don't have to cut as quickly. If the neutral rate is higher, the economy can handle more. And that's actually exactly what I want to get into now, Manis, with our next guest, because we've had this data.
For you.
You did. Thank you. Thank you very much.
You're welcome.
They should pay you more, you know?
Oh, I like that.
Okay, so the data, it keeps coming in strong, right? And this is the question. The economy maybe can handle more, and all of it bolstered Chair Powell's pushback on an early rate cut. But does it? Here's what Kevin Mon of Hennion and Walsh had to say. He writes, keeping interest rates at their current levels or potentially even higher for too long could substantially impact companies and consumers that are over-leveraged and exposed to short-term rate challenges. Pleased to say Kevin joins us now. He's the president and CIO of Hennion and Walsh Asset Management. So is Kashkari wrong then, Kevin? Does the Fed need to cut sooner than they're all talking about?
They do not. And ultimately, Danny, I think 2024 is going to be marked as an expansion of the rally, or a rally of the rest, if you will, beyond just those magnificent 7 technology stocks that accounted for over 60% of the returns of the S&P last year. But that's not going to happen until the Fed starts cutting interest rates, and that likely won't happen until the second half of this year. The Fed needs to see evidence of the economy slowing. Really didn't get that in the fourth quarter of 2023. It slowed from the third quarter, but it still rose year over year. So I think they need 2 consecutive quarters of a slowing economy, which they're forecasting, before they feel comfortable cutting interest rates. Once they do, I see upside potential for both stocks and bonds.
Okay, so that you're still bullish. You're not mentally scarred yet.
No, I'm not mentally scarred just yet.
Oh boy.
No, but herein lies the point. You look at some of these market moves, and it can get very frightening to step in at this kind of accelerated level on the equity market. Have you any caution about deploying cash? Because the argument that you have is that the longer I sit in cash in the CD, the more opportunity cost I'm giving up on the upside on the equity narrative. Are you suffering from that delayed mechanism of triggering deployment?
The markets have certainly got ahead of themselves. We saw in November of last year, equity markets rallied by nearly 10% in November. Municipal bonds had their best month since July of 1986, once the market started to believe that we reached the end of this rate hike cycle. However, they've already priced in a soft landing. They've already priced in the first rate cut. And unfortunately, I don't think that first rate cut is coming until at least July or August. So markets could pull back in a little bit, but once they do pull back and the Fed does start cutting interest rates and economic growth starts to moderate, then we're going to see opportunities in stocks and bonds again, beyond the Magnificent 7.
I'm so tempted to ask about small caps, Manis. Can I
go
do it
right
2 days
ahead.
in a row?
Go right ahead.
Okay, my small caps.
Running theme of Bloomberg Brief.
I know. One day I'm not going to ask about small caps, but I'm sorry. Today is not that. And yesterday, down by 1 1/3%. We've seen some of the regional banks that exist in there also leading those losses. When is it safe for me to go in that small cap market?
It really depends on which small caps we're talking about. One area that I really like in the small cap universe is biotech. Certainly from an M&A perspective, it's forecast that this year there'll be somewhere between $225 to $275 billion worth of M&A activity in the small cap biotech space. If that happens, that will be the second most on record. So some names that we hold within our Smart Trust UIT portfolios are names like Point Biopharma, Immunogen. These companies that are developing these innovative drug treatments to help treat cancer and other rare and chronic diseases. So I think that's an opportunity for investors to consider, but that doesn't necessarily mean that all small caps are worthy of consideration until the Fed starts cutting interest rates, provided that inflation continues to moderate.
And that's probably what holds the Russell back until then. It's sort of show and tell. I mean, the Novartis deal yesterday was a great example.
Very encouraging.
Nearly $3 billion for Morphosis. But you're not avoiding Mag 7. I mean, you like Amazon. I just wonder when you see moves like Mega Meta on Friday up 20%, $197 billion. Do you just sort of go, oh, I need to expand this? But you're long Amazon. Why are you long Amazon? And when you see moves like that, talk me through how that feels. Or when you look at that kind of move, you go, what should I do?
Sure. Amazon's our favorite name within the Mag 7. It's in fact one of our largest holdings. I always consider Amazon to be the hub of the e-commerce ecosystem. Amazon had a great fourth quarter. The revenue grew by 14% year over year. Earnings beat estimates. Revenues beat estimates. They provided positive outlook going forward for the first quarter. But I still remain concerned about the U.S. consumer that's over-leveraged. How much longer can they continue to spend? If, in fact, they shift to servicing their outstanding debt, $1.2 trillion of outstanding consumer credit card debt, and don't spend, well, the economy is only going to slow further because the consumer accounts for 70% of GDP growth here in the United States. So my concern going forward is how much more can the consumer spend? But when they do spend, they're spending online, and Amazon's the primary benefactor.
So when you start to see that shift happen, if you start to get those clues, are you ditching your Amazon stake then?
No, I'm certainly not going to ditch it. I don't know if I'm going to add as much to it, but there's still growth potential for Amazon. They continue to innovate, and there's other companies within the e-commerce ecosystem that continue to benefit, whether it's credit card companies, the delivery companies, the warehouses, the online access points. You spoke about small caps. We like small caps as well in the technology space, but in areas such as cybersecurity. I'm not going to go into artificial intelligence because that'll be a whole other segment, or robotics.
Show, Kevin, yeah.
So there are opportunities there as well.
When I listen to the conversation we've just had, you're worried about late arrival of Fed rate cuts.
Yep.
You're concerned about the consumer servicing their debt and perhaps pivoting to that.
Yep.
So what are we missing here? Because that sounds to me like something, it could be a soft landing, but it could be something much more corrosive.
Absolutely, and I don't have a crystal ball. You don't have a crystal ball.
Do I need to become slightly more tactically defensive now in advance of those smaller tail risks on the left and the right tail?
Yeah, absolutely. My biggest concern for 2024, if the Fed stays too high for too long and exposes that U.S. consumer and the U.S. government, who are both over-leveraged and could potentially push this economic slowdown into a recessionary period. I don't think that's going to happen, but for the next 6 months, market's going to become more volatile, and investors would be wise to be a little bit more defensive over those next 6 months. Not try and time the market and go completely onto the sidelines, but become a little bit more defensive. And then once the Fed starts cutting rates, then you look for those growth areas of the markets and even income area markets that are still undervalued.
Kevin, we've had another day, another big buyback announcement. This time it's BP, $3.5 billion. We're getting more of these for companies. They definitely vary in size depending on which they are, but do you want to ride...
The Americans did a bigger buyback.
Yes, I mean, you know, everything's bigger here. Do you want to ride that buyback wave? Do you like companies that are doing shareholder-friendly things right now?
Absolutely. I always like companies that do shareholder-friendly things, including increasing their dividends. Companies with a history of growing their dividends show a sign of management confidence and also balance sheet strength. In terms of buybacks, in fact, 5 of the 7 Mag 7 stocks are forecasted to buy back stock this year. That could provide a tailwind for upside potential for those stocks as well.
Tell me this, leave me with just one thought. Armati's running UBS, Credit Suisse combined. Can it ever stack up against Morgan Stanley here? Can it ever stack up against the Americas?
I think it's a very different type of business in very different areas of the world. Could they stack up? They can compete very well and go against different segments of the market, but they're very different types of companies. Both have upside potential. Financials are going to have some choppiness until the Fed starts cutting interest rates, but once they do, expect those large cap financials to start doing very well.
I'm going to have a party on the first rate cut. You can come to it, Danny.
I'm coming.
Am I invited?
Of course you're there.
I don't know.
We're joined at the hip time. I don't know why you think you're going anywhere.
Maybe I don't need to ask anymore.
Kevin, thank you so much for being with us
My
both
pleasure.
this Tuesday morning, setting the agenda there. Kevin Mann of Hennian Walsh Asset Management. Parties around. Danny and I can invite you all. Hop on the IB. Feel free. Coming up, despite a better than expected share buyback, guess what? UBS stock continues to slide. Why? What has Armati not got right in the messaging? Good morning from New York.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials, find people, analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
You're a famous photographer, you're a conservationist, you're an activist. How would you define yourself?
I think I'm just a human trying to figure out how to be a better steward of our little planet. I am a biochemical engineer by training. I studied marine biology, fisheries, aquaculture, and then I realized that the ocean is very much out of sight and it needs help. And so I became a photographer to be able to communicate with a larger audience. And thank goodness I was good at it.
When did you realize that actually photography was your passion and you could make a real difference to our world?
You know, I didn't start out as being a photographer, so it was not until 1990-something, 96, when I picked up a camera. And I became a professional photographer soon after. And it's one of those things that it's like learning another language. You learn a few words, and then you put a few sentences together, and one day, you might be able to write poetry.
Politics to the world of business. Every weekday at 5 p.m. Eastern Time, hosts Joe Matthew and Keely Lines deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power live around the world every weekday at 5 p.m. Eastern, only on Bloomberg Television. Context changes everything.
It's Bloomberg Brief. I'm Danny Berger, Manus Cranny in New York. Some breaking news, Manus. Aston Martin is interviewing candidates for its fourth CEO in 4 years. Current CEO, Emilio Felice, was appointed in May 2022. He came after his predecessor spent only months in the job. That's because Lawrence Stroll came into the company. He's the Canadian billionaire and replaced the CEO. So it's happening yet again, Manus. Fourth CEO in as many years.
Yeah, that's what you call sort of door action. I mean, of course, he did bring in external investment, brought in money, capital from the PIF, from China's Geely holding company, and from Lucid as well. So they all took stakes in this automaker. And then, of course, they did a little bit of your favorite, a little bit of Formula One.
My favorite. But it does just show you how much control Lawrence Stroll has over this company. I mean, he is the chairman, but he is the factor behind the continuous CEOs, again, 4 and 4 years.
Indeed. That's what you call revolving doors. Let's talk about UBS. There's one continuity candidate there. It is Sergio Motti. The stock's declining this morning. The earnings missed. It overshadowed some of the better-than-expected dividend buyback news. Sergio Motti spoke to Bloomberg's Francis Lecroix a little bit earlier in Zurich about the year ahead.
We are increasing our dividend by 27%. Is a good message of confidence. Share buyback are coming. We want to be prudent in the way we look at share buyback. We want to complete the first phase of the integration of the legal entities in 2024. But it's to give a little bit of a flavor for where we want to go.
Joining us now for more on UBS, it is Ankun Ranjan, co-head of Global Financials at RBC. Good to have you with us. Why is the market not more effusive about $1 billion buyback being reinstated?
Yeah, good morning. I mean, we're just on the call. There's obviously a lot of detail going on, but I mean, the shares they have moved up in the last month in anticipation of the deal benefits. And targets announced for 2026 today are in line with previous expectations. So I think there is like probably an element of travel then to arrive. The longer term potential is certainly there, as in the 2028 ROT has been set at 18%, and that's at the higher end of the previous range. But clearly 24 is, as the company has stressed previous times, many times, as it's a year of integration. So
well, Anka, in that year of integration, Motti, in speaking to Francine Lacqua, said we need to be willing to sacrifice a little bit of top-line growth in order to improve the returns of our financial resources. I know you say there's potential, but what do you make of that in the short term, that Motti is essentially saying we're willing to sacrifice some profitability?
Yeah, if you look at their revenue commentary, it's relatively subdued, but I mean, it's a reflective of the environment and also what we heard from other banks. They're stressing the emphasis on cost control, which I think is a bit of a shift in messaging. In the past, it was more about revenue opportunity, and now it's clearly about the addressing costs if revenues are not coming in. And looking at consensus numbers, there is potential risk, but obviously 2026, 28 is a long time from here. So I think the revenue commentary is somewhat disappointing, but UBS aims to balance this with more of a focus on cost and cost flexibility.
If I look at the promises on core equity tier 1, 15% core equity tier 1 in 3 years, 18% by 2028. Now, I look at the institutional shareholders, the activist shareholder, Sevian Capital, they want a 20% return. I mean, the gap is still there. Are they going to become more of a thorn in Almati's side in pressuring for higher targets?
Probably, yes, and unless I suppose that's in the shareholders' interest. But I suppose in 2024, there are a number of execution and implementation steps first to take before merging the entities, before any other measures can become more effective. I think clearly one of the areas has always been US wealth management, where the performance is lagging peers. And that's an area where hopefully longer term UBS can address.
Almati wants to surpass $5 trillion in wealth assets by 2028. Given the results, given what you're saying, is that possible?
Well, I mean, the market obviously doesn't seem to be a thing today, but I think, I mean, the ambition of 100 and 200 billion of net new money growth is clearly looks quite optimistic. I think that depends on if they recover lost assets, if the technology falls into place. I mean, we will see towards the end of the year and turning into next year. Mm-hmm. I mean, the ambition of the assets under management does not make, ambitious assumptions on market growth. So it is optimistic, overly aggressive. I don't think so.
Maybe that's having sat with him for 10 years, very much his strategy is keep the bar at a very steady level and then typically over deliver in terms of job cuts, in terms of return. I'm curious, one of the big markets, they've got Colin Kelleher there, they've got Almaty at home in Zurich, which is how much can they grow here in the United States of America? It's a pretty higher cost base relative to the rest of the business. So how important will growth in the US be?
I think especially the wealth management part will be a large driver. I mean, in the wealth management, it was already in the previous years like 50% of the growth. But it's also, 50% of the global wealth management is in the US, and it's underperforming peers. And clearly, they stressed again today that there is a focus on organic improvement and longer term probably is adding to this franchise. And I mean, one of the points is, I mean, obviously it needs to be seen, but the differentiation with Morgan Stanley, I think you had this in your previous conversations as well, is the cooperation with the investment bank. And that's probably where Credit Suisse adds to the franchise, because UBS, US Wealth Investment Bank, wasn't as strong. So that can add to the whole platform. It will be a longer term part, but I think the US and US wealth management will be quite an important part, especially in the later years of the integration. And frankly, it's not as impacted by the wealth management part from the deal. It's more the adding the additional product. Right. So the US is an important part and hopefully can lift. I don't think UBS will close the gap to Morgan Stanley, but I mean, at least re-rating towards Morgan Stanley.
And to be fair, Almati is saying investment banking returned to profitability this quarter. Anka, thank you so much for joining us. Anka Reinjen, co-head of Global Financials at RBC. Coming up, we're going to take a look at some of the market moving events for you to watch throughout the day.
The younger generations are more, of course, pay more attention to sustainability, and so they are looking at brands that are greener. But you have to make sure you're authentic because they hate greenwashing. But what is very important to remember is that none of them, whether they're young or not, will ever sacrifice product quality and efficacy to sustainability, which is why part of the big transformation of our R&I, where there's this €1 billion we spend every year, most of it is spent on transforming our formulas from petrochemicals to biosourced ingredients and green sciences, but without losing the efficacy.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. How has that shaped your strategy for the bank? Is this a new normal? Is this like a catalyst? Do you think we're in a new phase for dividend policy overall? That's a great question. I'm Francine Lacroix, and this is The Pulse, every weekday at 9 a.m. only on Bloomberg.
It's Bloomberg Brief. I'm Danny Berger alongside Manus Cranny in New York. Let's get you set up for your trading day this Tuesday. Here's a look at what's ahead. Treasury Secretary Janet Yellen is expected to testify before the House panel on financial stability oversight, 10 a.m. Eastern. Then a host of Fed speak on deck. Mester, Kashkari, Collins, Harker all speak this afternoon. And earnings, those will come from Eli Lilly and Spotify before the bell, then Ford and Snap after the close. And Manus, we've already gotten some positive tech earnings moving markets this morning.
You have indeed, and that snapped that big red headline yesterday on the job cuts across them. Some stocks to keep an eye on. You got Palantir jumping first annual profit. You got big AI demand, and the CEO there, Karp, says an onslaught of AI interest is coming through from the customers. Wonderfully rich word, an onslaught. You got Toyota up 3.78%. Market value tops 50 trillion yen for the first time. Toyota raising its profit outlook, and that's a lot of that is on the gaining ground in the electric vehicle area. Boeing down by 0.8%. Of course, the demand for pay rises, 40% pay rise, escalating production risk there. That's on top of all of the other issues, Danny. So that's the state of play on the micro movers. It is going to be about Fed speak, really. I think that's going to define the movement for the market.
It's going to be about Fed speak because of what we just had back to back. First on Sunday, we had Powell saying that they can't move too soon. And then yesterday, we had Kashkari saying that post-pandemic, the neutral rate has moved higher, so they don't need a cut potentially as soon or as much. So does the rest of the Fed speak follow that pattern?
Look, I think they're all going to try and show restraint. Just look at that new RBA, head of the RBA. Yes. She came out with a hawkish hold saying, if we need to go again, we will. We've got Mester, we got Collins, we got Kashkari, and we have Harker. So there's a quartet of voices today.
Yeah, and it's about giving themselves flexibility. If they need to move again, they can. All right, we're going to move now. Surveillance, that's up next.
cruise ship is much more than a flotilla of financials and numbers. Naftali Holt showed me around the Celebrity Beyond, Royal Caribbean's newest ship, rolling out not the red carpet, instead, the magic carpet, an example of investment that's yielding returns in several different ways.
Originally, actually, we designed it because we wanted to have a really nice platform for tendering, because sometimes we can't home port
So
destinations.
functional.
Exactly, value functional. And then we looked at it and said, why don't we just make it a really cool feature spot where people can enjoy it beyond the functional space? And we created this bar. It went up and down.
Now, what does it take to
How
do?
about the Instagram? Can you speak about that?
I can imagine.
Instagram moment with the sunset, you're having a drink with your friends or family. I mean, that's amazing.
So what does it take to do something like this? And I'm thinking cost, engineering, time.
Yeah, a lot of effort from a lot of people. So it starts from just the design and the conceptual aspect of it. Then we need to figure out a lot of technical factors, the weight, the wind, and so lots and lots of hours of really hard work. And every time we up the game, we see that customer willing to spend more.
Always on the heartbeat of the tech
spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
This market is extremely powerful to the upside.
What we're going to see here is a broadening out in quality growth.
What happens from here is a broadening to other areas of the market that aren't necessarily as risky as we think.
When we think about a broadening out, we think that there's an opportunity here for small cap to catch up.
This market is ready to rotate and wants to rotate.
This is Bloomberg Surveillance with Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. This is Bloomberg Surveillance alongside Lisa Abramowitz together with Anne-Marie Hordern. I'm Jonathan Farrow. Your equity market on the S&P 500 totally unchanged. In the bond market, we had some big moves. 2 days, 27 basis points higher on a 2-year yield at the front end of the curve. Bramo, Deutsche Bank out just yesterday, dropping its recession call. They've held that since April 2022, I think, going all the way back something like 2 years.
Talking about the soft landing, it seems like now a base case, talking about how the Fed can't cut rates for as many times as they previously thought. Taking a step back, there is a narrative shift underway, which is that this economy is not slowing down enough for it to be exactly Goldilocks. And what happens at the end? Do you end up with a higher rate? Because right now, Fed rates are not as restrictive as so many people had previously expected.
Just to give you a flavour of the conversation when I came in this morning and Lisa sat down, Goldilocks is on life support. I was like, okay, is that the kind of morning that we're going to be having?
100%.
Goldilocks is on life support.
Yeah.
I'm going to go through some of the calls for you, Bramo. Marco Kalanovic, JP Morgan, it's worth considering upside risk for rates. Dominic Bunning over at HSBC. We see rate pricing in the US being more prone to upside than the downside for now. Andrew Hoddenhorst, Citi, like this, contrary to the consensus narrative, the economy has not yet made a soft landing, and it likely will not.
This also speaks to why Matt Lazzetti over at Deutsche Bank now has a base case for a neutral rate of 3.5% from 3% and possibly as high as 4%. This speaks to what Neil Kashkari of the Minneapolis Fed was saying yesterday, where maybe we're looking at a higher neutral rate. Here is the question: how restrictive is a Fed funds rate when you have an economy that, if it's not slowing down, it could even be accelerating?
You saw the ISM yesterday for services. Just phenomenal. What was that about?
Especially given the fact that, yes, the headline figure was greater than expected, but prices paid surged the most going back for a month to August of 2012. How do you justify this? Yes, it's the Red Sea disruptions. Yes, it's the fact that people are getting more expensive. How do you square this with disinflation?
Let's set the stage. It all sounds pretty bleak, so forgive us. Goldilocks on life support and AMH, a bill on DC that apparently is dead on arrival.
Well, I'm not sure. I think at the moment it potentially is on life support as well. James Lankford, the Republican who authored part of this bill, said he's not willing to hold its funeral just yet. What we do know from behind closed doors meeting, and Punchbowl had a great report out this morning saying that what Mitch McConnell has said, who continues to back this bill but understand doesn't have the votes yet, is saying that the political mood has changed. So potentially, if this drags on for much longer, potentially we could see them come around. But right now, you're going to see a lot of airing of grievances out loud coming out of Washington, D.C.
I am so deeply frustrated by this story. I have to be honest, because right now it feels like there's a game of political checkers going on, and it's not the real issues that really have to get dealt with, which is the international involvement of the United States and what's going to happen with border control. And these are some of the issues that we need to be having conversations with. Instead, it's, well, does this make me feel bad, and who's going to win, and who puts this in a better position, and that's what we're going to be talking about.
This is why people hate Washington, D.C.
100%.
And politicians. It's the difference, Anne-Marie, between good politics and good policy. And one at the moment is not the other.
It's not. But again, I wouldn't say, and I go back to what Terry Haynes said yesterday, 60% chance it gets done. It might be dead on arrival at this moment. But we potentially, weeks, months go by, they could be forced to come around to something. So I wouldn't say it's completely dead yet, but this is how Washington works. No deal, no deal, no deal, until there's a deal.
That theme is going to be something we explore throughout this morning. Let's turn to the price action on the S&P 500, totally unchanged. Nothing unchanged about this bond market. What a move we've seen in the previous 2 days. The 2-year now at 4.46, leads to the 10-year at 4.16. A move of almost 30 basis points across the curve.
What I find fascinating is it's not just the 2-year. It's not just about Fed expectations. It's now a longer-term run rate for the 10-year. We're talking about the biggest increase, 2-day increase in yields for the 10-year going back to 2022. Are people reassessing that long-term neutral rate? And that, I think, is really compelling for a variety of asset classes.
Let's push that through foreign exchange just briefly. 107.30 is where the euro is right now, and that currency pair negative once again by 0.1%. Coming up this hour, Larry Adam of Raymond James with Wall Street pulling back calls for a recession. John Lieber of Eurasia Group with a border deal in the Senate on the verge of collapse. And Julia Coronado of Macro Policy Perspectives as the Fed continues to push back its first rate cut. We begin with our top story, a series of upside surprises upending recession calls on Wall Street. Larry Adam of Raymond James expecting the equity market rally to continue. He says this: we are 1.3 years into this bull market versus the average bull market of 5.5. We still see upside longer term. Larry Adam, I'm pleased to say, joins us now for more. Larry, let's get straight into the data, sir. Jobs data, blowout report on Friday. Yesterday, ISM services looking tremendous. How much weight are you putting on that early 2024 data?
Well, it's important data that we continue to get. You know, we're still a little bit skeptical about some of those jobs numbers because they don't exactly foot with what corporate America is talking about. When you hear a lot of these earnings reports coming out, you're seeing a lot of layoffs taking place. But I would say that with those strong numbers, if they continue to come, it does narrow that path of us thinking, because historically, to get a recession, you need to lose about 1 million jobs. So if you continue to see that strong growth, you're probably not going to see that type of loss in jobs this year. And you could actually get that soft landing that we had been looking for.
So far, good news has been good news. There has been this feeling that the economy is strong and that that's really going to support stocks. When do you start reconsidering what restrictive means, what the neutral rate is? How does that factor into your thesis?
Well, I do think that good news is always good news. You know, one of the things that we always talk about is that we have a base case for where the equity market is going to go. But if the Fed were to avert a recession and we get a soft landing, there's a lot of even upside risk to our forecast. And the reason for that is that, again, good news is good news. If we avert a recession, that probably takes our earnings forecast higher, and ultimately it takes the price of the equity market higher. So I think that that is always a good thing for the markets when you do see this good news longer term.
A lot of analysts have been parsing through why the U.S. is so different from, say, Europe, from other regions that aren't seeing this kind of growth. A lot of people pointing just to stimulus and the fact that it's still coming. I know that you like industrials. How much is that tied to U.S. industrial policy and the fact that there's going to be a whole boatload of more of money flooding into the sector?
Absolutely. I mean, we believe in that industrial renaissance that's taking place. If you look at all the money that's been set aside previously, whether it's the CHIPS Act, the American Recovery Act, the Inflation Reduction Act, there is still tens of billions of dollars sitting on the sidelines to help bring that manufacturing back to the U.S. And that is the reason why we continue to believe industrials will do well for the foreseeable future.
Larry, what if this leads to a persistent repricing of interest rates and repricing interest rates higher, which is what we've seen over the last 2 days? Can you just explore that scenario with us? If that happens, what areas in this equity market right now are most vulnerable?
Well, again, I agree with you that if interest rates continue to move higher, that would continue to weigh on the equity markets. Our forecasted interest rates actually go lower because we do see a soft patch coming in this economy during the middle part of the year. You know, one area where a lot of people think that higher interest rates is going to hurt is the mega cap tech stocks. I don't agree with that. We've been talking about that from the beginning, that these stocks, for the most part, have been insulated from those higher interest rates. You know, if you have higher interest rates, that tends to be better growth, and better growth drives those more cyclically oriented sectors of the market. So where I would worry if interest rates go higher, those more interest rate sensitive sectors, that's going to be your rate sensitive sectors. That's going to be your utilities, your consumer staples, you know, your REITs. Those are the areas that are going to be more negatively impacted if you do see those higher rates.
Larry, where does it leave the financials, the banks?
Well, the financials, I think that they're in pretty good shape. You know, that's always interesting when you see these headlines about the possibility of, you know, a bank going under. Keep in mind that regional banks are 1% of the S&P 500. It's a very small portion of it. If you look at what's actually in the S&P 500, it's going to be your big cap bank stocks. It's going to be insurance companies. And for the most part, they've continued to do well as we've come through earnings season. Their balance sheets are solid. They're talking about an uptick in capital market activity this year. If you look at what happened yesterday in the senior loan officer survey, they're talking about more people or more banks actually getting lending out there. They're looking for more demand. So I think the visibility and earnings for the banks, big banks particularly going forward, is still pretty solid.
I remember when people cared about SLUs. We were talking, John, about how the senior loan officer opinion survey.
I thought of you yesterday.
I was reading it and I was thinking, this isn't interesting at all. This is basically giving us no information other than there just isn't, it's not that bad, which I guess speaks to exactly what Larry is talking about. Larry, you said you're expecting a soft patch. I'm not seeing it. If we don't get that soft patch, does that make you more bullish or more bearish?
If we don't get the soft patch, it makes us more optimistic, because what that'll do is that'll increase earnings, and that'll obviously lift our target on the S&P 500. But I would remind you that historically, when these recessions come about, they come about very quickly. If you look back at the last 12 recessions, the quarter before the recession occurs, GDP growth is around 2.6%. The next quarter, when you get a recession, growth falls very quickly. It's negative 3.5%. So it can happen very quickly.
Just to put a bow on it, because this is really something people used to say a lot, was that higher rates will make stocks reprice lower. What is the rate at which you get uncomfortable with stock valuations? Is there sort of a yield that kind of gives you a little angst?
So I think it's two things. I think it's the level and then the time period that you get there, right? I think we were on this show once. I was on the show once before when we actually hit 5% with that 10-year treasury yield. At that level, I think that that really starts to slow down the economy quite a bit. And you were seeing that because not only was it impacting, for example, the housing market, but you were seeing a lot of companies not going to the market to get additional funding. But as that's fallen back pretty quickly, you started to see a resurgence again in corporate activity, which is going to help support this economy. So I think if you get up to that 5% level, I think that that does really start to crimp the economy.
Hey, Larry, great to catch up as always, sir. Larry Adam there of Raymond James. Let's go back to that. I remember last spring, the only thing that mattered, not payrolls, not CPI, the Senior Loan Officer Opinion Survey. And Lisa, when I read this yesterday, I thought of you. We haven't talked about it at all. I can give you the lead paragraph just in case you missed it. I'm sure many people did. US banks reported stricter credit standards in the fourth quarter, although the proportion of those tightening standards shrank from the prior period. So it's getting tighter, just not as tight as it was before.
And basically the people who are tightening they're kind of slowing the pace of how they're tightening. Basically, it's not that bad. And people are actually starting to extend credit. So if you were looking for this as some sort of, red herring, and it's not it.
It didn't lead to this tightening of lending standards that would ultimately tip over the US economy. We'll go back to the Deutsche Bank call. Matt Lazzetti and Deutsche Bank, you go back a couple of years, this was their outlook. Rates would rise to between 5% and 6% on Fed funds. Great call. Okay, what are the consequences of that? Significant recession by late 2023. That was ultimately the view that you'd see a lot of pain in the labour market to get inflation back down towards target. Hasn't happened. Spring of last year, the banking stress, tighter lending standards, economy's going to roll over. Hasn't happened. Here we are again starting 2024. They're going to cut interest rates in March. What happens? Great data. to kick off the year. And to your point, I think you're right. You can just feel the conversation slowly turning. I'm not saying we're there yet. I think you need another month, 2 months of the same data we've had so far to really change people's thoughts on this. But you can see the direction it's going in early 24.
People are still saying it's early, but there is this possibility that we reverse this and we kind of get a repeat where the economy is better than expected. We don't get as many rate cuts and everyone chugs along with a new neutral rate.
No landing. I think we did no landing last year in February, right? February was no landing, then March was hard landing.
We are in February, so
Something
we're no landing, repeat.
About a year ago.
We're hovering.
Just everything seems to repeat in this market. What did you call it? Narrative roulette?
Yeah,
narrative
that wasn't
table
mine.
tennis.
Yeah, it was,
James
that was James
Athey.
Athey. That was very well said.
Over at Aberdeen, it continues, just narrative table tennis. Let's get you an update on stories elsewhere this morning. Here's your Bloomberg Brief with Danny Berger. Hey, Danny.
Hey, John. Southern California continues to experience heavy rains and floodings thanks to a powerful Pacific storm. The National Weather Service says rain is expected to taper off today, although flooding and mudslides remain a risk across the region as the storm moves east. The so-called atmospheric rain has dumped 10 inches of rain in the mountains west of LA and caused $11 billion of damage. Shares of Palantir are soaring this morning after the company gave a higher than expected profit outlook, all of it driven by AI demand. CEO Alex Karp told Bloomberg the company is, quote, rebuilding the whole company to meet the surge. The software and analysis company also marked its first year ever of being profitable, with 2023 net income at $210 million. Users of Apple's Vision Pro are discovering the pain of losing your passcode. The company is telling users they'll have to bring the device back into the store or mall, or mail it rather to AppleCare customer support if the device is disabled after entering the passcode incorrectly too many times. The Vision Pro went on sale on Friday, wear category in almost a decade. That's your Bloomberg Brief. John.
Danny, have you seen a Vision Pro out in the wild yet?
I went to the Apple store. I said, can I demo this thing? And they said, sorry, ma'am. The wait list is 3 days long. So
3 days?
3 days long.
3 days. Danny, thank you. Have you seen one out in the wild yet, Emily?
I have not, but 3 days to try a $3,500 product, when you add in potentially more storage space, the kit to carry it around, this is what most average Americans make in a month.
I've seen
and
people,
3 days to try it.
I've seen the video of people walking around with this in the city. That's not the future I want, Bramo. I know it's the future that some of you want. It's not the future that I want.
It's the future that my oldest son was trying
to
sell me on last night. He was saying, he's like, this is the future. This is, you don't need an iPad. You don't need a laptop. This is going to be the future. You can superimpose your eyes so that people feel like they're talking to you, so they can see you. And I said, I don't.
What would TK say? When I was a lad, we just wanted a wooden go-kart, something like that. And now kids want a $3,500.
I'm not buying it for
Vision
him.
Pro.
Let's be very clear.
I wanted a
headset.
Nano.
You wanted a what?
A Nano.
A Nano. Oh, right. Okay. Thanks for that. Good. Up next on the program, President Biden making a plea to Congress.
My message, Speaker Johnson, is pay attention to what the Senate's doing. Everything in that bipartisan bill gives me control, gives us control, without being, and still meets the needs of the people being able to legally come across.
That's coming up next on the program, live from New York City. You're watching Bloomberg Surveillance.
Was going to keep reading World Cup. This is a 3 as the economic picture covering the intersections of Hollywood, Silicon Valley, and beyond.
This is
Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Beginning the week by pulling back from all-time highs on the S&P 500. Equity futures this morning a little bit lower. We're negative by 0.04%. Yields unchanged. Anything but unchanged over the previous two sessions. Big move higher by double digits on a 10-year, 2-year over the last 2 days. Right now this morning, the 10-year 415.59. Under surveillance this morning, President Biden making a plea to Congress.
My next Speaker Johnson is pay attention to what the Senate's doing. We got a bipartisan deal, so you're going to see the detail of it this week. Everything in that bipartisan bill gives me control, gives us control, without being, and still meets the needs of the people being able to come across, legally come across. We're going to open avenues of legality and shut down the ones that are not coming through the points of entry.
Here's the latest this morning. GOP support souring on a deal to impose new U.S. border restrictions and unlock Ukraine aid. Republican senators warning Wednesday's planned vote is too soon, with top GOP negotiator James Lankford saying the legislation is, quote, a work in progress. John Lieber, Managing Director for the United States Eurasia Group and former policy advisor to Senator Mitch McConnell, joins us now. John, how narrow is the path to get this bill through Congress?
Right now, I don't think there is one. This bill has been rejected outright by the House of Representatives, and that's really the key question. I mean, a lot of senators would be willing to vote for the deal if they thought it could become law, but the House is telling them there's no chance this becomes law because they simply aren't ready to legislate around the border. So that's a really narrow path. Even if the Senate did manage to pass something this week, which is looking less and less likely, it's dead on arrival in the House, in the words of Speaker Johnson, and that means there's no path forward here.
Senator James Lankford, who's the author on the Republican conservative side of this, said he's not prepared to hold a funeral yet. We've seen in Washington things take a really long time. Do you think at some point they'll have to coalesce around a deal? Because there's still Ukraine aid that needs to get done.
Yeah, there's a lot of interest in doing Ukraine aid, absolutely, among both Republicans and Democrats in the House and the Senate. And if you put a clean Ukraine aid on the floor, I mean, the irony is if you put a clean Ukraine aid bill on the floor, it would certainly pass with overwhelming majorities. But the issue is, how do you get that bill to the floor? There's still other vehicles out there. You've got to fund the government by March 8th. This border trade for Ukraine deal was originally President Biden's idea that was embraced by Republican leadership to do the Ukraine aid. But the border deal just was a bad trade-off, it turns out, because Republicans aren't interested in doing the border. So Ukraine's got other paths. It's not quite dead yet. You also have this tax bill that's out there, which could be a path. But the border continues to be a bridge too far for U.S. politicians.
But Biden linked them because of pressure from Republicans. At some point, are American voters going to blame Republicans that this deal doesn't get done?
Yeah, unfortunately for Biden, the incumbent tends to take the blame for things that are happening in the world, and the situation on the border, which sure looks like a crisis, is something that Biden is carrying the blame of right now. In many ways, to your point, in many ways, Republicans rejecting this bill, which actually looks like a reasonable compromise, that's to the right of where Democrats would have been even 5 years ago, helps Biden pin the blame on him. It's a little bit of an inside baseball argument for Biden to make, however. He is the incumbent president. He takes responsibility for what's going on.
John, I'm getting increasingly frustrated reading about all of this negotiating because honestly, it just feels like political checkers, and we're not talking about the actual issues and what's actually going to get done and what actually needs to get done, and it doesn't seem like there's actually an honest meeting of the minds. You've been in Washington a long time. You have worked for many different members of Congress. How different is it today than it was, say, even 5-10 years ago?
Yeah, I think the difference between maybe, let's call it 15 years ago, is there were bad faith actors who would try to tube compromise 15 years ago. There just weren't that many of them, and they didn't have the megaphone that they get today. And now those bad faith actors have sort of grown up, particularly in the Republican Party, to just attack anything that moves. And that's their only instinct, is to say no. And they benefit by taking down, the establishment, as they call it, and going after leadership. They can fundraise off going after leadership. They can fundraise off of it. They can send out emails off of it. They can get on social media off of it. And they've rejected this bill even before they knew what was in it. That makes it extremely difficult to get anything done. And it's frustrating to watch, because it means that we're going to have these continued crises like we do on the southern border, and nothing's going to get done about it, just finger pointing to the other side.
There's a question here, as you put, about a 30% chance of Ukraine aid passing, 35% chance of the tax bill passing alongside it. What the consequence of this is, can you extrapolate out, if you are currently still the senior economic policy advisor to Mitch McConnell, what would you say would be the potential consequence of not having action in these spheres?
Well, this tax bill is, it's a modest fiscal stimulus for households next year. It's a sizable tax cut for corporations next year. Ironically, the tax cut for corporations is one that is a tax increase that Republicans put in place in order to fund the reduction of the corporate tax rate in 2017. So they're trying to undo pieces of their own tax reform bill. I think that bill probably could go away, and there'd be some unhappy corporate lobbyists in Washington without major consequences. But the Ukraine aid is a big deal. And, Ukraine is fighting a fight against an aggressive neighbor that looks like they're going to poised to make some gains this year if they can't get this money. If Washington can't continue to signal support for its allies, this is a signal that people like China, North Korea, Iran, and Russia are going to take and interpret as a fact of Washington's weakness. And it's going to show how the dysfunction is undermining America's global leadership role. So the Ukraine aid, I think, is quite important to get done. And I'm sure that most members of Congress agree with me. It's just this morass they're stuck in where they can't get anything done means that this bill's chances are declining.
John, I'm pleased that you've joined us, because I know that you can answer this question. In this bill, some conservatives are pointing to one specific passage of it, which seems to imply, according to them, that you will allow 5,000 border crossings every single day before shutting down the border. John, I know it's not that straightforward. Can you tell us what it actually says and what it actually means?
Yeah, look, this is a pretty convoluted provision, and if I were drafting the bill, or if, Senator McConnell or Senator Langford were drafting the bill on their own, this is not what it would look like. But basically what they've said is, once illegal crossings pass 5,000 a day, they can shut down the border, which means no more asylum seekers, barely any asylum seekers, and it fundamentally empowers them to ratchet up enforcement on the southern border. So this is not letting in 5,000 people per day, as they say. It is making enforcement much stricter based on the current conditions that are on the border, and shutting down the asylum paths, which are one major way that people are crossing into the United States right now. That would send a signal to other immigrants, other migrants trying to get over the U.S. border, that they better stop coming. I agree with President Biden here. This gives him some power. It also would potentially empower a future President Trump if he wins in office. So this is clearly a win for people who are concerned about the border, but they don't want to take it.
Interesting. John, thank you, sir. John, leave it there. Of your Asia Group. Bramo, I can sense the frustration across the desk on this issue. You're not alone. I think people at home feel the same way.
But the issue is, you can debate the insides of this bill. You can debate whether it is valid or not. You can debate whether it's effective or not. Love to have that debate. I don't want to have a debate of who exactly it helps and what exactly it means in terms of a popularity contest that's going to happen at some point.
Again, policy versus politics.
Correct.
In a big election year, which is 2024. Coming up on this program, the outlook for European banks as UBS looks to move beyond its takeover of Credit Suisse. UBS is down 2.45%. Equity futures just a touch negative on the S&P. From New York City, this is Bloomberg.
you formed a partnership with Penny Pritzker at some point to do parking. Is that right?
Yeah, so when I was working at JLL, that we went through this real estate recession in the early 90s, and the senior people at the firm said, let's do a retrospective on all these different asset classes to see what happened, how we overpaid, why we ran into so much trouble, what really happened in the marketplace. And when I did that, I recognized, wow, there were a lot of reasons why I liked the parking assets better than I did office and retail and industrial. And so I started really noodling on the differences between those asset classes and came up with a rationale to start a business in the parking space. But I crossed paths with Penny Pritzker, who later became our Secretary of Commerce. And she liked the idea, and she and I went off on this adventure together and built a real estate operating company in the parking space.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 11 a.m. on the East Coast, 8 a.m. in the West. Only on Bloomberg Television. Context changes everything.
It's good news, truly good news. Yesterday, it wasn't. Sometimes it is. We'll try and figure this out. And the equity market on the S&P 500, slightly negative on S&P 500 futures, positive on the NASDAQ by 0.16%. Yesterday, the ISM services read just looked tremendous, jumping in January, delivering the biggest gain in about a year. New orders proxy for future demand, rising to a 3-month high, looking pretty decent as well. Prices paid. That climbed. Now, that's concerning. In the bond market, 2-year, 10-year, 30-year, 10-year yields higher, 2-year yields higher over the previous 2 days, now a little bit lower by a single basis point or two. The 2-year, Lisa, 445.36.
People thinking, how much can the Fed actually cut rates at a time where you're seeing signs that maybe there's even a reacceleration in the economy and in inflation? Key question for us keeps being, when does higher yields and higher for longer start to bite in the economy, and at what level? We still don't know, and I think that's the takeaway.
Are we sufficiently restrictive based on that data we got yesterday?
I don't know. Who knows? Because honestly, there could be a lag. Some people are saying that. Other people are saying maybe we have to reassess.
Let's get to foreign exchange and reassess what's happening there. Dollar index yesterday climbing to the strongest level since, I think, mid-November. The euro breaking down again, negative here by 0.1%, 107.33 on that currency pair. Under surveillance this morning, let's begin with our top stories. A Senate deal to impose new U.S. border restrictions and unlock aid for Ukraine is on the brink of collapse. Republican senators saying a Wednesday vote would be too soon. The bill would crack down on illegal border crossings and speed up deportations of undocumented migrants. In turn, $60 billion in aid would be made available for Ukraine. GOP presidential frontrunner Donald Trump rejecting the bill, and leadership in the House calling it dead on arrival. Now, for those of you at home who think that maybe financial journalists are gloomy, take a listen to Politico this morning. The title, the subject of their morning note, AMH, everything is dead. Everything is dead, apparently.
At the moment, but the Republican author of this bill, James Lankford, said he's not ready to hold a funeral just yet. But this is the politics surrounding this bill that got very tricky for Republicans to sign up and vote for a motion of cloture on it tomorrow. President Donald Trump says, quote, "This bill is a great gift to the Democrats and a death wish for the Republican Party." Why? Because immigration is starting to become a bigger issue heading into November. The economy is better, according to our polling. People are starting to rank immigration as more of a priority of a reason they want to go out and vote. And when it comes to a trust deficit, when voters ask about Trump or Biden, they see Trump doing better when it comes to immigration in the southern border.
Let's return to that quote. The first couple of lines of that I think are important. That number that keeps coming up in conversations down in Washington, D.C., the number 5,000. That this bill only gives shutdown authority after 5,000 encounters a day. Can you build that out just a little bit?
Senator Kirsten Sinema has been very vocal about this because she's very frustrated. She's an independent. She worked on this bill as well. She took to Twitter last night and said the border automatically closes when migrant encounters reach 5,000. That does not mean that 5,000 migrants are permitted to enter the country every single day. So it's not legalizing those 5,000s. It's just making an automatic mark.
You still think there's a path for this to get through?
Well, also when the consensus in Washington says no, 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 I would say there's a chance down the road maybe there's a yes.
One to watch down in Washington. Let's turn to China. that place, the equity market, has been all over the place. Bets growing, the Chinese government will backstop the country's stock rout. President Xi Jinping expected to meet with regulators as soon as today to discuss options with nearly $7 trillion being wiped out of equities in Hong Kong and China since 2021. The news lifting China's benchmark index to its best day since 2022. Foreign inflows also surging, adding 1.7 billion today, the most this year. We've seen plenty of reports suggesting that President Xi's about to do something with little detail
on spending, the lack of enthusiasm in credit demand, and frankly, just policy inconsistency for foreign businesses.
We're heading into the Lunar New Year. We know how important this is for Chinese government officials. And Jonathan, you and I were talking about this morning. Who's briefing who? Is Xi Jinping briefing regulators or regulators briefing him?
I think Xi does the briefing, right? When you have these meetings, I imagine Xi's doing the briefing. This is what we need to do. And to your point on Lunar New Year, I think this is really important. They do not want citizens going home, being with families, talking about how bad this equity market is. They want to fix it, and apparently they want to fix it before the weekend.
So what does he instruct them? Go out and buy stocks? Go out there and just, haul them into court if they start to sell things?
What do they call the plunge protection team? The national team? Isn't it called the national team?
This really is the reason why people are buying, because it's got to be something good, and it's going to be ahead of the Lunar New Year. Key is it just hasn't stuck. You just continue to see the losses. And so again, how much do people keep buying a story that doesn't really have lasting power?
Equities in China doing better overnight. Let's finish on this story. Bit of clarity on what happened last week. Growing pressure from a top US regulator leading to the surprise decision for New York Community Bank to slash its dividend and hoard cash. We're reporting here at Bloomberg that senior executives held behind-the-scenes conversations with the Office of the Comptroller of the Currency ahead of last week's drastic moves. The bank saying the decision to build reserves was part of an expected transition to tougher capital requirements after taking on assets, Lisa, from Signature Bank just last year.
Yeah, it's that $100 billion threshold that they crossed that suddenly made them susceptible to more regulations. But Jay Powell, in a 60 Minutes interview, talked about how they're working with a number of banks. I wonder exactly what kind of other conversations are being had behind the scenes. And I know people have pinpointed the Zions and Comericas of the world because they're inching up toward that $100 billion threshold. But how many of these are there? And that, I think, is a key question at a time where people still clearly were spooked by this.
Learning from the lessons of last year, maybe, because the ultimate criticism wasn't about the regulation. It was about oversight. It was about the enforcement of existing regulations. So is this surprising based on what we experienced a year ago?
No, but it sort of unveils some of what's going on behind the scenes. And you have to wonder, especially given Jay Powell's nod to this, how much more of this is going on? And is that sufficient to remove this sort of concern that people have about a credit constraint in the market?
This is the US banking sector. Let's turn to Europe. UBS shares falling after missing fourth quarter earnings estimates. The bank set to ramp up its cost-saving goal and resume share buybacks, entering what the CEO, Sergio Ermotti, is calling a pivotal year.
I think that one thing that we need to do is to be willing in the next couple of years to sacrifice a little bit of top-line growth in order to improve the returns on our financial resources, particularly on the balance sheet.
Joining us now to discuss Bloomberg's Jan Patrick Barnett. Jan Patrick, let's get straight into it. What are the goals of Sergio Ermotti for 2024 and beyond?
Well, I guess like the biggest goal that stood out to me is like, well, actually two big goals. One is they are aiming for an 18% return on equity, which is like very bold for a European bank, even for UBS, I would say. And the other one is that they're aiming for 5 trillion in invested assets in their very important and core unit of wealth management. So these are two goals that are very ambitious. I would say they are not like out of the ordinary. They are achievable, but they give us a clear path of what UBS is thinking at this moment and how they want to go with this like new entity and the merged Credit Suisse. The other big goal was on cost saving. They bumped this up again here, showing us as well that they are like on track with the merger and that are trying to lift those synergies from that merger that are like at the core of the whole idea to do it and to make that whole merger work. So I would say like these results are like pretty good, and I'm not so sure why the shares are down today. There are probably a couple of things that people are worried about, but to me, like today was a very reassuring result, I would say.
JP, let's get to some of the worries. When they took over Credit Suisse, there was some concern that maybe some gremlins, some monsters, were hiding on the balance sheet over at Credit Suisse. JP, have we dealt with those gremlins?
Well, we don't know yet. I mean, like UBS tells us that they're very sure that everything that they have outsourced, so to speak, into the non-core and legacy unit, that they can handle, that they're not expecting big credit losses. And in today's results, that's actually true. There was not much to be worried about. Could there be some trapdoors down the road still? I mean, it's always possible. I mean, like, if you just look at what he said during the call, that they have 6,000 different boxes to tick to make that merger work. And I'm pretty sure like one of those boxes, or even a couple of them, is credit quality and asset quality, and they still have to go through a lot of stuff. And then, of course, you have to take into consideration what's the market going to do with those different assets. But like overall, I'm pretty sure if there's like anything major that would be a concern to the market, they would have told us by now if they know.
So they're the gremlins, and then they're the mundane concerns of just how many wealth management clients want to diversify between two firms and might move away from UBS, who previously were with Credit Suisse, because they want that diversification. Do we have any sense of what's going on with that?
Well, that is still a big issue. And I mean, if you look at the pure numbers, even if you take that target of 5 trillion invested assets in the wealth management unit until 2028, and if you go into the little nitty gritty, then you can calculate that the growth rate that they're assuming for this is basically interest and dividends from all those invested assets. So they are not like really calculating in there like a lot of organic growth, so to speak, like on a growth basis. And the bank said like, look, we have to still like consider that we have people leaving the bank for client reasons because they don't want to bank with UBS alone, or for the advisor reasons, or even that UBS says we don't want you as a client anymore, because they have been very vocal today about like optimizing their business, and that they're not taking every client on board just for the sake of making a few extra bucks. They really want to like look at the holistic client relationship and want to have like a full idea of a client, and not just like have only a loan, for example, or only doing brokerage for the client as a thing. So using some of those outflows. That's why some people can argue that like maybe those targets are a little bit vague, so to speak, and it's not clear the path to that target. It's not like 100% clear, but I guess like UBS is doing the best they can at this point, and there are lots of moving parts in this merger. But to me, very important is, and that was actually the failure of Credit Suisse, is like UBS is very good at this point in, and what you said, like connecting the dots. They're giving us the dots, they are telling us a story, they're telling us how they want to achieve what they are putting out as targets, and I guess that's more important to most investors out there, at least the long-term investors, because they want to understand how the management thinks, how they want to structure the new bank, what's at the core, what's not, what's priority, what's not. And I feel like they're doing a very good job in doing this.
Zooming out, there's a question of whether UBS is a model for what's to come in terms of merging certain major European banks, or is it just sort of benefiting from the, frankly, boom that we're seeing in others, including UniCredit, including a whole host of other European banks that are actually delivering results that are impressing some investors?
Well, it's very hard to use that as a blueprint, I would say, in Europe. First of all, I mean, UBS and Credit Suisse have been like very similar in terms of their business and their focus with the wealth management at the core. So that makes stuff a little bit easier. It's the same country, so you don't have like a big impact of cross-border merger. So that makes it very hard to say like this is going to work for all the other banks. It is reassuring for the sector as a whole that you can make a big merger work, but there's still the problem of like big fragmentation here in Europe, different regulation, different standards when it comes to capital and how you can move capital between entities across borders. So that's still an issue that needs to be solved, in my view, before you can like talk like really cross-border mergers, stuff like, I don't know, a UniCredit merging with a Deutsche Bank or something like that. That is still very far down the road, in my view.
Don't get people excited, JP. JP Barnett. Bloomberg, thank you, sir. This is the latest this morning from the Wall Street Journal. I'm not sure how many of you might have seen this story already, but here it is. JP Morgan planning to build 500 more branches in the next 3 years. Take a listen to this for a target, Lisa. Executives, according to the Wall Street Journal, targeting a 20% share of U.S. deposits. A 20% share of U.S. deposits.
In fairness, where else do they have to go? Because they already have something crazy in terms of proportion of overall shares. So if they want to grow, they just have to dominate that much more. I mean, it's JP Morgan's game and everybody else is just sort of playing in it.
That's what last year felt like, right?
Pretty much.
Yeah, the last number I saw was the share of deposits was something like 13%, which is already a pretty staggering number.
Right, correct.
And only going higher. That's the latest from the Wall Street Journal this morning. Let's get you an update on stories elsewhere this morning. Here's your Bloomberg Brief with Danny Berger. Hey, Danny.
Hi, John. U.S. Secretary of State Antony Blinken is on his 5th trip to the Middle East since Hamas's October 7th attack on Israel. Blinken will meet with Egypt's president before traveling to Doha. Negotiators from Egypt and Qatar are proposing a deal with Hamas to pause fighting and allow for the release of the remaining Israeli hostages. Israel would in turn release Palestinian prisoners. Blinken is also expected to make stops in Israel and the West Bank in coming days. Republican presidential candidate Nikki Haley has requested Secret Service protection after receiving threats against her. Haley confirmed the threats in an interview with NBC, but did not disclose any further detail. Haley's qualification for the protection would be determined by the Secretary of Homeland Security after consultation with a congressional committee. King Charles is receiving treatment for an unspecified form of cancer. Buckingham Palace has ruled out prostate cancer, but is not specifying any further detail. The palace adds King Charles will continue, quote, state business and official paperwork. He remains wholly positive about his treatment and looks forward to returning to full public duty as soon as possible. That's your Bloomberg Brief. John.
Hey, Danny, thank you. Appreciate the update. Up next on the program, the data-dependent Fed.
If we just keep getting more data like what we have gotten, we're well beyond the path to normalization.
That's coming up next, live from New York City. This is Bloomberg.
Regional sports networks. There's a lot of, it's a business that seems to be collapsing. Leagues have sort of toyed around with, should we do something ourselves? Some teams are doing like local TV and streaming. How do you see that shaking out?
So I don't think I'm right on this, but my instincts keep telling me this is what's gonna happen. Because if you remember the WWE, they launched their own network that had their own content and had their own pay-per-views. And it was kind of a smart, bold, ahead of its time move. And then they pivoted at the perfect time and they sold their content to, what was it, Peacock?
Yeah.
And that was really smart too, because they were able to leverage that number as high as possible. So they always zagged where the money was and when the opportunity was. I think the opportunity for the NBA with the local teams would be to own all that themselves.
Was you were offered a money-losing women's basketball team, and you said, I want to be in the other sports as well. Is that right?
Well, yeah, you know, you got to be smart about this.
Live from New York City, check out a price action. Equities look like this on the S&P 500. Equity futures negative here by 0.13%. Yields going absolutely nowhere. 415 on a 10-year, some stability after the chaos. Can we call it chaos, Bramo?
Yeah,
the last
sure.
couple of days.
Go for it.
We're going,
Wild.
Double-digit moves Friday. Double-digit moves yesterday. Payrolls blowout report Friday to end the week. To kick off the week, the ISM services read pretty tremendous.
The reason why I don't say it's chaos is because there was a very clear shift in mood. It wasn't necessarily on this sort of uncertain what's going on, which trader is selling. This was all of a sudden trying to reassess whether the path of inflation is going to come down more slowly and if the Fed cannot cut rates quite as much as possible. It's a reset, and I think that people are sort of saying, how much further does this have to go?
I'm doing this for you. $54 billion of 3-year notes coming today, anytime. $42 billion of 10-year notes coming tomorrow.
Yep.
Then later in the week, we'll get $25 billion of 30-year bonds. How much of a test is that?
I think it's important, and actually I have it all written down and I'm very closely watching it because I think that this is important. I mean, basically, we're talking about supply issues that people care about when they are just nervous in general, and they don't care about it when they feel like, you know, we're going back to something familiar, to this sort of low inflation narrative. So it's sort of a good narrative test. Maybe not necessarily narrative test. Maybe not necessarily, you know, going to set the agenda for deficits and, you know, are we going to get some sort of vigilante? It sets the tone, though.
If you are a Bloomberg subscriber, ECO space 20 space US, go. And you get the list of all the auctions. It's like Bramo's favorite function on the Bloomberg terminal. Under surveillance this morning, the data-dependent Federal Reserve.
It feels like the economy's been quite strong on the growth front. You got big jobs numbers, you got big GDP numbers, better than expected. But at the same time, we've had inflation better than